Here we go. We are here. We got Kris. Hello.
What's going on, guys?
What's going on? Can we get a good morning in the chat if everyone can, or good night wherever you are, if everyone can see us. Let me open up this thing right here. How are you guys? Sachin, how are you? All the way from Malaysia. How are you today?
Ben, I'm doing good. I think, it's not. I think it's a pretty good day overall. Okay, feeling good about it. How you guys are doing?
Okay, there we are. I'm seeing them coming. I'm doing very good. Kris, how are you?
Good. Just woke up not too long ago. I'm on the East Coast, so it's still 6 in the morning. I'm not an early riser by any means, but Palantir earnings day, right? I couldn't really sleep too well last night, so I don't know. How did you guys sleep?
I didn't sleep too well. I'm gonna be honest with you. I told my dad, I was like, Dad, my dad knows nothing about what I'm doing on YouTube, right? I was like, Dad, I gotta be up early tomorrow because like I'm doing something live. He was like, what? I was like, there's this company I'm like talking about. He's like, with who? I was like, so there's this guy from Malaysia and this guy from New York, and like we're gonna be talking about. So I was like, make sure I'm up by like 6 o'clock. And then he calls me at 6:45. He's like, yo, are you up? I'm like, yeah, I'm up. And I'm like, oh, I got 5 minutes till I get.
I don't know about you, but brown people, they don't care what your kids are doing unless they're like doctors or engineers. I don't know why. Like I tell my parents all the time, they're just like, hey, Dad, I work in radiology, blah, blah, blah. They're like, yes, son, we are very proud of you. But like any other time in my life, they're like, nah, we don't care. We don't care.
I love it.
I try to explain a lot of people that what I do when I was geophysicist, and people didn't understand. So at the end of the day, you work with computer. So that's what I say. I work with computer, end of story.
Perfect. Okay. So we have, first of all, we have 175 people here. Thank you so much. 188. We have now phenomenal stuff. 208 we are at right now. Phenomenal. Sachin, what are you expecting so first of all, what's going on pre-market with the stock? We're at 1276, so we don't have results yet. So the stock has been sold off before results. Sachin,
I think it was expected. See, the idea was always, there was a bit of pickup in the starting. The idea was that there should be a big beat. And to be fair, the results are just good enough. You expected they are just slightly better in most of the category. We saw there was a miss in there was some operating loss, and as it was pointed to me, it was a lot of marketing budget that was expended in last quarter. That's probably it. It is not spec loss because it's in the operating income loss that has been shown. So
wait, Sachin, are the results out? Do you see the results already?
Yeah, I already posted on Twitter.
Oh, shoot. I didn't even know. Hold on. Let's read these out loud.
I told you guys that results will come 1 hour early. So you need to wake up 1 hour early before that, guys.
Yeah, but no. I assume that was 7 a.m. the results because the call is at 8 a.m. That's what okay.
Yeah. So let me. I can read the results if
please read them out. Yes.
So the revenue for last quarter was 433 million, which represents nearly 34% growth in terms of year over year, and so overall, like the revenue grow in around 41% overall on the year-on-year basis. The commercial revenue grew around 47%. The US commercial was, I think, probably the best spot, which is 132%, and it is expected. The US picks first, and eventually they will expand outside. The government revenue grew 26%. They added 34 net new customers in the last quarter. The loss of operations was 59 million. Okay, that was a bit of a bummer, but I think it was expected because now they are increasing their sales and marketing efforts. So, they have to take that somewhere. Hopefully, it returns into revenues moving forward. The adjusted income from operations was 124 million, representing margin of around 29%. The cash from operations is 93 million. And adjusted free cash flow is 104 million. So in terms of cash, they're actually doing pretty good now. They have like 2.3 billion in cash. They have liabilities of 74 billion and debt 0. So this is pretty good. Overall, the GAAP basis they are negative, and adjusted like non-GAAP basis, their diluted earning is like 2 cents per share. So I think the earning is in a way is especially the GAAP earning is a bit of dirt because of the loss from operations. But guys, I mean, if we want them to increase their efforts in sales, I think this was expected. So overall, if you see, I mean, they did like 1.54 billion in terms of revenue. Okay, my target in the starting of the year was 1.65, and I always keep ambitious target on that. Their
Right.
US revenue overall year-wise was pretty good. It grew 53%. Commercial as well. So I think it was overall it was fine. I was a bit worried when I saw initially the adjusted operating margin, and Kris and I was discussing about it offline. But when I saw like the marketing expense, I mean, I expected it that there's some expense has gone up because revenue hasn't declined. So that's pretty much it. The one thing which highlighted to me, and I was reflecting on it. See, this was the last quarter, and last quarter where everyone goes all guns blazing, from the customer side also, because they have to finish their budget also. So, but you saw that they still grew up in terms of line. There was last line which caught my attention. If you go towards their earning, it says that as per guidance, they still expect revenue to grow 30% or greater through 2025. Before this, they never said 30% or greater. They said ballpark 30%. So this is first time there is a subtle increase in that. But yeah, I think they still have to resolve issues internally, especially in terms of reaching customers and how to scale. So the question for me is still same as we discussed: is it's going to be a great company or it's going to be a Titanic, like a Titanic in a size, not in a Titanic in terms of sinking. Back to you guys.
To me, I think it was a lot of the stuff that came out was significantly bullish, but you have to really read between the lines in order to understand that. Sustained growth is really hard to do, no matter what industry you work in, right? So when you have compounding effects, to constantly grow at a 35% rate is hard to do. It's not unachievable. It's definitely hard to do. But I think if they execute well, they still have the opportunity to do it. The commercial growth was definitely really good on the US side. One of the things that definitely holds them back a little bit right now is the lack of growth on the government side, which tends to be mainly because of factors that happen on government spending, right? When you think about all the budgets and everything else, they usually start to do a lot of that stuff in October for the federal government. So a lot of the expenses are still, the contracts are still being worked out, and revenue recognition may not all be there. So if you look at fourth quarter, I think in 2021, the growth wasn't exactly there either, right? So if you're thinking of, hey, which quarters are you going to see lumpiness in terms of growth, and which ones you're going to see kind of like a little bit like tempered growth, Q4 tends to be tempered growth for Palantir because of effects around government revenue and other aspects as well. The other good thing is the expansion of their sales force in the US. Because of that, they were able to grow almost triple digits, which is perfect because now that means that they've got a working sales model, right? Or at least on the US side. And one of the things that I think we're going to start to see is that same level of expansion being focused on in Europe. And I think if they're able to execute well on that side, then you'll see this constant growth happen. So one of the things that I was always a little bit curious on is how much money are they going to commit, or how much resource are they going to commit to their government side versus their commercial. So obviously now we can see that they're more optimistic about their commercial side. So that's where they're probably going to be focusing more of their energies. So I think this was a decent quarter. I would say this. This was definitely not the market expectation beat that some people were hoping for, but that doesn't mean that we're all bad, right? So one of the key, I think, differentiators that I'm hoping for that gets discussed in this conference call is a product or the productization of their Foundry software so it can be implemented more globally. Right now, the thing that concerns me, to be honest with you, is not necessarily the revenue number or even some of the operating metrics, but more the total number of customers, which still is in double digit territory. Like if you're trying to become $1 trillion company, or your aspirations are, hey, we're going to get to $1 trillion, you need to be growing your commercial clients way more than that. Like you really need like a lot more customer ads, unless their business model lets them be a little bit more agile with how they operate. like I said, I need to see that more in order to get more bullish. I do think it was a good quarter, though. I think the sell-off, considering where the current price is right now, is unjustified. I think it's really early. I think a lot of the selling doesn't make sense. If this was 25, $30 stock, and news like this came out with a little bit of tempered growth, a little bit of adjusted operating metrics kind of taking a little bit of a downward spiral, you'd see a somewhat of a correction. But I think we're in territories of already being so corrected that falling further down is not exactly the outcome that we would have expected. And I think this is something that's similar that's going to happen to, I think if you guys look at earlier in, I think, Q1 or Q2 of 2021, where in pre-market the stock was down, and then over the course of the day it just recovered back up to a point. I think that is what we're probably likely to see. So I don't know about anyone else, but I may end up actually picking up some really cheap calls early in the morning, with a lot of people just trying to get out, and hopefully that pays off by the end of the day. We'll see.
No, the pre-market action is what we call like a ticker tape action, because there are a lot of algorithms nowadays that try to read the sentiment and immediately act. And this is exactly what happened. There is negative EPS miss, let's sell. So I expect the price to level off pretty soon as well. Back to you, Amit.
Yeah, first of all, I mean, the pre-market sell-off is nothing to me. I mean, like, look, we're already at 13.14. We were at 12.76. And again, like, this is not, we shouldn't be stressing over these like 50 cents or anything misses like that. But these numbers look good to me, guys. 34% total revenue growth. We were expecting 30, so they beat on that. 34%. Government 26. Commercial is up 47%. That's amazing. Commercial revenue 132. That was 103 last quarter. Adjusted operating free cash flow. That's great. Gross margin same. The only thing again is that net operating loss, and that was a big thing here. So total revenue growth, they grew 41% year over year. So like they said 30%, they got to 41%, which means theoretically that was sandbagged, right? So we should be expecting in going into 2022, like if a very high growth company, we should get a little bit more than 41%, something like that. $400 million of adjusted free cash flow. They got above that. I believe that was really important as well. Commercial revenue growth 34%. That's kind of in line with Q3. And U.S. commercial revenue growth 102%. So I want to go through some of these numbers and just talk about it. So again, 1.5 billion revenue, 41%. And so this is a company so far that is growing at 41%. That is what we have. Some of the things they did: vaccine programs, public safety, $200 billion Russian money laundering operation. I didn't know they did that. Okay, that's cool.
So the number 200 billion, I mean, that's the kind of value their product create. And how many other products can claim such things?
The NHS's 2-year license is just under 25 million euros. By contrast, Test and Trace spent 155 and struggled to produce the desired outcome. So they're showing, okay, guys, look, like we're actually saving people's money at this point. Gotham, Foundry, Apollos. Obviously, Gotham's the longest and has been around the longest. New products. So Edge AI, we know about that. Meta Constellation, we've covered that. HyperAuto, that was a while back. Titan, OpsPI, Cosmos, and Apollo for customer SaaS. That's the one that the IBM employee was super, super excited about. That's the one he thinks is the most underrated. Our customers are saying, okay, so this thing, what do you guys think about this? What are your thoughts on this quote right here that Sham just gave the other day as well about Foundry and AWS?
See, one thing we already know that their product is enabling customers to build their own product. I think what people miss a lot of time that see, in the B2B space, the data can be monetized in several ways. Okay, and that is very different. Like for example, I mean, you can sell the data as a product, which Viso is doing. Okay, you can also use data in real time. That is also part of a bit of Viso. I mean, in terms of analytics that they do up there. You can also use data in every decision. That's what the Airbus is doing. You can also use like in terms of like flexible, ready to use data and insight. That was Marcus Entropy. So the way you monetize data in the B2B space is very different. And all of their clients, what they are selling data products based on what they have built on Foundry. And that is very different from just building in-house solutions for them. That means they can scale these products fast. They can add new modules on it. It can work with a lot of data solutions which are already existing. So if the products designed or the IP designed by their customer is good, they can scale it fast. And since a lot of these companies, they have some sort of equity arrangement, so it should have some valuation going further. More important, if these products become kind of a norm in industry, I mean, that's where they will reach a position where they'll start dominating an industry or dominating a workflow. So, like I said earlier as well, that I'm extremely bullish. What AWS did was like when they came into the, if you see the history of AWS, I mean, if you see the S3 storage, if you see the Elastic Compute and three, four things, that's pretty much what revolutionized AWS, and everything is now coming on top of it and they're trying to reach it. What they are doing is they are giving you a full package where you can make a finished product. And I know this because I also connected for my own startup, and I asked them like, I want to build a startup. What is Foundry for Builder look like? How can I connect with them? And they came up like the proposal was like very comprehensive in a way that like what they do and how do they work with different IPs. So it was pretty good in terms of revenue sharing and everything, like in a model like what you can think on the top, like okay, they really help you with a product that you can really build something very fast on it. So more and more people will take it, and I will expect more solutions from like small startups that should come and build on it. So I think it will do something similar to what AWS has done for developers, but they need to invest in developer community, which they have just started. So results will only come in time. Back to you
Yeah,
guys.
I agree with that. That right there is the key point and the hitting point that you just said. That developer community is very important. Without that developer community, you're not going to get the mass adoption that you need in order to for this to become a ubiquitous product that everyone has to have or must have. You know, the corporate enterprise works by almost like the bigger you get, the more likely it is that you get adopted, right? Like back in 10, 12 years ago, Salesforce was not necessarily the thing that people used, right? But because Salesforce started becoming so ubiquitous with people, now all your counterparties are using Salesforce, your competition is using Salesforce. So guess what happens? Now you're forced to use Salesforce. So I think this similar thing might end up happening to Palantir in that if more people come on board, if more developers take on Foundry, start building products on Foundry, then it almost becomes like a corporate initiative to get yourself on Foundry as soon as possible. Otherwise, you're going to be left behind.
I agree. But if anyone has any questions in the chat specifically about earnings or just Palantir in general while we're going through the slide deck, please send them. I'll keep a monitor on it, and we'll start answering some of those questions as we go along. So commercial momentum, 19% Q1 2021. They were growing 28%, 37%, 7%, 47%. I mean, that's a nice trajectory for the second year of them being public. You know, like obviously everything could be better, but that's pretty phenomenal. They had 49 customers full year 2020. Commercially, 147% full year 2021 during the time where Omicron was still happening, during the time where supply chains were still not the best, people still didn't have the best budgets. Obviously, some of the supply chain stuff probably helped them get some budgets, but I mean, that's pretty phenomenal. Growing double, 2 times the amount you have within 1 year in the commercial space for a company that's spent 17 years in the government. That to me is, I like that. I like that a lot. I think that makes some sense. A little bit of this revenue, 72% Q1 2021, all the way down to 132% Q4 2021 in terms of revenue. So they are up 371% in terms of customer count from 2020. They had 17 customers to 80 full year 2021. So if they were able to go 371% in terms of customers in 1 year, if they could go 400-500% over the next year and get that 80 up to something around 250, I mean, now we're talking a lot bigger numbers in terms of what we're looking at here.
And one of the most important part is that these numbers were achieved with a handicapped sales force because they didn't have a proper sales force.
Very good
point. Even like I was trying to reach, and I mean, a lot of people in my industry nobody from Palantir has ever reached them. I have seen this statement from a lot of people in a lot of industries. So they are handicapped and in terms of Salesforce, and this is what Alex has also acknowledged in his recent interview in Germany, that this is something they need to learn, and they are learning on it. They are in the process of hiring nearly 1,000 people. So when they will have a proper Salesforce, when they will have a proper communication channels with developers, in addition to that, when they have products which is more modularized, as Chris and you pointed out, I think that's the inflection point. And until then, we cannot say when that inflection point will come. My view is that until and unless that inflection point comes, they will keep meeting the expectation. They are tailoring expectation in a very tight manner that this is what we are going to do. But when they manage to reach that point, that's where we are going to see divergence. So at this particular point, we still do not have an answer where the inflection point look like. We see the direction, which is in the right format, in the right way, and they are doing good. So at this point, they are doing very good, but it's not great. It's good, in my opinion.
I think the other thing I just want to touch on that is within the healthcare space, we for the last 2.5 years have been primarily focused on dealing with COVID. So we haven't got a chance, honestly, to take on a lot of new digital transformation projects, right? I know right now from what I've seen, Foundry actually benefits probably healthcare, probably one of the most significant ways. And it's unfortunate, but COVID kind of like slowed down our need to kind of constantly improve things. And I think now that COVID is starting to come down and our hospitals are starting to open up again to vendors and sales staff, I think we are probably likely to see more products Palantir healthcare wise start to get adopted in the next couple of years. I think there's a lot of spend, a lot of money that is being allocated right now to figure out challenges around resource staff, like especially staffing. Like right now, I can't tell you guys the amount of staffing challenges we're having at all the hospitals. I mean, in my department alone, like everyone's begging, like, hey, we need staff. And we're just not getting it. So there's only one other way that we're going to be able to deal with this shortage of staff, and that's to improve and become more efficient and basically live without those additional staff members. And I think Palantir Foundry can definitely help in that process. So.
Yeah, no, I agree 100%. The healthcare point is a big point, especially as things start to open up and they're actually able to sell. What you said, Sachin, about not having a sales force, that is incredibly important to understand. Let's read some stuff from the chat. Nick says, why did I buy so much yesterday with a clown emoji? This is why trying to time earnings is always tough. I ended up not buying anything really over the past couple of days. So, but again, Nick, it's not a big deal. I mean, you bought at what, 1340 and it's at 1290. Like that's the stuff you can't lose too much sleep over at that point. Victor says, what are some of the worst part of earnings? EPS, which is pretty irrelevant, but then what? So what do you guys think if you had to say this was a bad, or is there anything that's bad, or is there anything that's not good?
See, I mean, even in my investing philosophy, I have made it very clear that I never look earnings, and there are reasons for that. See, earning is a byproduct of everything else company does. So you need to understand that how numbers are stacked up. See, revenue has gone up. Their debt is zero. They have a lot of cash. The company is in no concern. Their customer count is increasing. Their overall new alignments and strategic partnerships are increasing. See, so at this particular point, they invested a lot of money in the marketing and sales effort, which was needed because everybody was saying that Palantir is under investing on that part. So there is going to be a hit on that part. See, earnings have to be looked from the lens of capital deployment and the growth the company investing in their own growth. If they are doing it properly, there should be something that come in future. If earnings are bad and company is not doing enough investing in their growth and the capital deployment is poor, then earning is concerned like this. At this particular point, I'm more concerned that they get their sales execution right. Back to you guys.
Okay, let's read this slide, then we'll talk another questions. Non-U.S. commercial investments in sales in 2022. Net dollar retention 103. So they're saying so this is international company. So in full year 2021, internationally, they increased their customer count by 109%. So in end of year 2020, they had 4. End of year 2021, they had 29, then 32, then 67. All right. I think that's decent, 109% growth full year 2021 internationally.
Yeah,
and if you see on the last slide,
I was going to say this is all during COVID, right? So
yeah.
Oh, I'm sorry. Go ahead. So I mean, a lot of the macro level events were probably slowing down that growth number probably a lot more. If it wasn't for COVID, I think we'd see a lot more growth, and I think that's what we're expecting in Q1. But go ahead, Sachin. Sorry to interrupt.
Yeah. So in the slide that you were showing in terms of international, if you see that 10-year which is 9 months, the commercial salespeople, which has more than 9 months, it only increased from 4 to 6 only. And we discussed this in past that see, B2B is not like this. You hire a salesperson and he will immediately start churning you out. So even the smartest salesperson will come. He has to understand the product company philosophy. Then he has to open the sales negotiation. Need to understand what's going on the client side before he actually create an opportunity and close a sale. So even if they increased the sales team to 29, I would say that last year most of the sales team was pretty much ineffective for two reasons. First, they were new in the company, and second, as Kris pointed it out, because these people joined in the COVID lockdown. So that means the onboarding cannot be as smooth as somebody who lands up in the office on day one. Back to you guys.
Yeah, no, that makes sense. I mean, B2B sales is not easy, right? Especially with a product that they're selling to try to actually be able to expand this. This is showing some pretty phenomenal stuff on their end in terms of just being able to grow. And we know they just enter Germany. So they hired a new VP of sales, Philip Matu, to basically lead the Asia Africa region. So, and this guy did $16 billion of revenue in that same region as he was leading sales for Oracle. So we know that they're ramping up sales. I expect these numbers in 2022 to be even more, a little bit crazy. All right, government, Gotham, the Dark Knights. Let's talk about this. 76% year-over-year growth 2021, 66, 34%, 26% Q4. So this one's slowing down a little bit, and the reason for that is they're aiming more for the commercial versus for the government, right? So obviously they were getting a ton of contracts a little bit in the beginning. That stuff is naturally going to slow down because the government at some point has a limit. You can't just expand to every single government if you want to pick on commercial. But overall, still very good to see how this is going down. How do you guys feel, or Sachin, what is your interpretation of the governmental growth that is going on?
See, the governmental growth, I was actually even expecting to go even higher than this. Okay, because what we have seen, maybe it happened in this quarter, we are seeing the sentiment in geopolitical uncertainty is actually increasing. Okay, we are also seeing that government is increasing the regulatory environment, for example, around crypto and other thing, which will enable more products to be consumed by government. I also assume that at some point the government also has to start putting more data-driven exercise in terms of net zero. That will also create opportunity for some of the products. I expect government growth now, especially we know that what's going on in Russia-Ukraine situation, what is happening with China. There has been a lot of cyber attack security issues has emerged. So my understanding is that government need products now. So they'll be buying a lot more in at least in next 1 year and 2 years. Back to you guys.
Kris, any thoughts?
This is one of the reasons why I'm never the biggest fan of government revenue. While it is sticky and it is continuous, as you saw, if you go back one slide, you can see that once you get into the contracting space, the government is gonna retain you for a long period of time. The problem is acquiring those government contracts. It's not easy. You have to get through the regulatory bureaucracy of just getting past so many people just to get the contract signed, and then on top of it, just getting them to pay a little bit more here and there. So it's hard. It's really hard to do government sales. Anyone that's worked in government sales, my hat's off to you guys, because I know the level of bureaucracy you have to go to. Every time you call somebody, they pass you on to another person, and that person passes you on to another person, and it's a pain in the butt. But what's good is that you can see that the net dollar retention is there. So it's lasting revenue that I think will finance this growth, right? That was always the intention of Palantir, to start off in the government where you have this revenue that's constantly coming in, so that cash you can redeploy to other parts of the growth curve. I think so if you look right here, that number, that 26%, remember what I told you guys, there is usually a marked decline in the total revenue recognition that usually happens in the fourth quarter. And I think it's important that in Q1 of 2022, I think we'll see a lot more growth from the Gotham side. So if you remember last year, there was the same concerns that happened where people were like, oh, Gotham, you can see Q1 and Q2, 76 and 66%. People were like, wow, are they still a government contractor? Well, now you can tell, no, they're not a government contractor, because they're not growing crazy amounts to be considered just a government contractor. Their commercial side is growing fast too. But I wouldn't discount Q1 and Q2 in the next couple of quarters for Gotham growth. I think hopefully that kind of helps in the mix. And then we see that we see large amounts of growth in Q1 and Q2 thanks to a favorable revenue mix during those quarters. So I just think, like I said, Q4 tends to be lumpy in terms of government spending, where there's probably going to be a lot more pickup of that in Q1 and Q2.
Couple questions. So this one, Samuel Main asks, does any of the data shared today change or affect your bear or bull valuations for the next 10 years?
For me, nothing has changed at this particular point, because any expectation I will only change when I see a clear divergence and inflection point. So that there are no signs for that. They're still meeting the guidance. They are still providing the guidance, which is close to 30%. So in my view, their growth is still constrained by their own efforts. If they increase effort, they sort their internal problems, their growth can actually go big. And until and unless they show signs for it, I mean, I will not change my expectations or my guidance that evaluation I have for them at this particular point. Back to you guys.
Kris, go ahead.
Yeah, I think it's too early for me to change anything that's in my head. I think they've got a very similar growth trajectory to Salesforce. Whenever I look at their numbers, they seem very similar. They still have the same growth trajectory. They're trying to hit very similar industries, which is B2B focused, not necessarily the B2C like Tom is always hoping for. Because that, if you see B2C, that's huge amount of scaling and growth right away, which I don't think is in Palantir's cards. So when you look at a growth trajectory and you want to look at a comparable, Salesforce is probably the one that that probably I would go with most. So it's almost like a nice sustained growth curve going up, not so much like this going up, right? So hopefully we see the same thing, and we see, because now Salesforce is what, 20 times what it was in 2010. So hopefully if Palantir executes the same way, and if not better, then we're looking at a minimum of a 20x from here, which is huge. So let's see what happens.
Yeah, I mean, if we're looking at a 20x from $12, that's almost basically $200, a little over 200. I mean, I think that's what we're all in it for, right? And I mean, again, the numbers, the market's going to do whatever the market wants to do, but the numbers are, I'm not disappointed with this as a shareholder in particular. This is like looking like decent stuff to me. Can we, I want to ask you guys about this, because I don't think I'm too knowledgeable about this. I want to know, maybe you guys are, what exactly is GAAP profitability? When a company says they're GAAP profitable, is there any specific thing? Does that mean just like, that's different than operationally profitable, correct?
Yes. So if I have to summarize in a very simple way, when you do accounting has both cash and non-cash items. Okay. When you include everything like cash, non-cash, okay, that pretty much what becomes your, in a very broad sense, your GAAP. I mean, GAAP is more a principle, but that's pretty much it. So for example, if you give a grant and that grant is vested, in reality, you did not give cash from your pocket. Okay, but you did give some sort of wealth. Okay, that wealth is non-cash, so it is different in terms of non-GAAP versus GAAP. So cash position hasn't changed, but in terms of profitability, because of dilution, has changed. So that's a very broad difference in one aspect of GAAP versus non-GAAP. Okay.
GAAP is also a little bit weird in that there's a lot of accounting rules that have to be taken into account of how you do it. So a lot of companies, especially tech companies, are poorly positioned in order to get to understand its true value because of GAAP. That's why if you look at a lot of companies in the tech space, they use non-GAAP or adjusted GAAP in order to truly give a picture of the business and how it's operating. If you look at some of the companies right now, if you look at them on a GAAP basis, they're not really that great. But then when you look at non-GAAP adjusted and you see that they're constantly growing, then it makes total sense. So I would say for tech companies, you should always look at GAAP, but then also there are some non-GAAP factors in there, such as share-based compensation, that have to be taken into account because that's how the tech sector usually gets paid, versus, let's say, a utility company where, you know, the workers are not getting paid in shares. They're getting paid at just salary, right? So when you do the accounting, it looks wonky depending on which one you're looking at. So that's why the tech companies have to, at least on some level, show that there is an adjustment. Because if not, then a lot of tech companies would look like they're constantly losing money. So
Yes.
Yeah, and it is by law in US that you have to report the gap. I mean, if that's not the law, I think tech companies will never report the gap. They will only report adjusted or non-gap. So yeah,
If
back
you're
to you
just
guys.
joining us, 41% revenue growth year over year. What do we have? 34% total revenue growth in the quarter, 26 government, 124 operating income million, 132% US commercial revenue growth. Overall, not a bad earnings at all. Did not smash on every number. They missed on earnings, but they were good on revenue and a lot of the other sort of key metrics that they needed to get to, especially in a quarter in 2021 where COVID was still unlikely. A lot of stuff was going on. Now we're getting into 2022. One of the videos I did a while back was covering a lot of the deals that they did, and a majority of those was in November, December. And there was a lot, there was a lot of stuff that the company was ultimately doing to get done. I suspect in 2022, a lot more deals are going to get done. We just saw they announced a little bit new of a partnership with Wejo. Lots of different things happening. Overall, I'm pretty satisfied with the growth, and now it's just a question of being able to analyze what they're going to do on this call. Another question: this is an interesting one. Will European Salesforce wages experiences drag down Q1 2022? Meaning the hiring of the Salesforce for Q1. Do we think that's going to be necessarily bad for their overall profitability in Q1 reports for 2022?
See, hiring of Salesforce is an investment. So when these charges, but you see, the Salesforce has three components of compensation. One is the salary. Second is a cash bonus that will come as a result of sales when sales will execute. The third will be equity, and equity is given, and that will only be vested in 3-4 years down the line. So at this particular point, if you see, the only cost they have to assume is pretty much the salary cost. Okay, and it will increase, but I don't expect it to completely drain, because when you expand your workforce, you always account for it. And since they are, I mean, so see, they have $3.8 billion of deal value remaining. They have $2.3 billion of cash in hand. There is no debt on them. Okay, if you take their revenue as 2 billion for the year 2022, they are currently trading at 14x price to sales. The nearest company or the similar companies in private space are at P2S of around 40. The leading companies in this space is around 80. So the question is, I mean, you have to make your mind on this one, that growth is aggressive. It's not super aggressive, it's not exponential, but their growth is actually pretty good. So yes, they need to invest in Salesforce, because that is what that is dragging their growth back. So if a company is already growing 40%, okay, and they realize that their effort in Salesforce is not enough and they are investing it more, so the idea is to grow beyond 40% for sure. Okay, back to
Yeah,
you.
real quick, Kris, I'll say one thing. I think also they know what it looks like to the investor world, right? So if they're growing 40%, but it's like destroying their profitability because they're paying all these salespeople, there's going to be adjustments, right? I mean, this is a pretty big company that knows what they're doing. So if they have to hire more people to get more sales, that's inevitable. It's just got to be done in a strategic way so that it doesn't destroy profitability or make their profitability numbers quarter over quarter look negative, right? So I think there would be a level of adjustment there, even if they have to hire more people in sales.
Yeah, short-term profitability in this stage of growth should not necessarily matter nearly as much as people think. Right now, everyone should be focused on growth, right? You need to get to the point where you are the market leader or the dominant platform by which every company is doing business on, right? So right now, even if it means giving up a few margin points here and there, which right now, Palantir has significant margin what do you call it, margin that they can actually use in order to get to the point where they're ubiquitous everywhere, right? Um, right now, I think they're in that growth phase, so they're willing to spend, and I agree with that. I want them to spend that money. I don't want them to hoard cash that's just sitting on the balance sheet for no reason. Think about it this way: the last year and a half, they sat on $2.5 billion in cash. Okay, what did that get you? Nothing. Guess what? Better use that cash, deploy
That
it,
money
get
actually went
sales.
down in value because of inflation.
Exactly. Use the cash. Get out there. Start recruiting. The other thing I do want to mention is that Salesforce, from what I know, aren't necessarily paid the same level of compensation in shares.
Yes.
because shares are much longer. They're actually paid more on a commission basis, right? So when you take that into account, you won't see the high level of SBC that we've necessarily seen other quarters. I think also one of the things I'm going to be interested in hearing on this call is how they're planning on scaling without increasing their workforce. Because one of the things, and this is what I really like about Alex Karp, he always says we're always trying to figure out ways where we can become better and we can scale up, but we don't want to add to our headcount. And he usually says it because we don't want to necessarily change our culture, but that just means that when you add people to your development mix, you can risk creating a lot of friction there, right? So you want a core group of people that are developing your product and know your product and are expanding your product, right? But at the same time, you don't want to add too many. It's almost like adding too many cooks to the kitchen, right? So one of the things right now, if you see an expansion of employees, it's probably either on the deployment side or on the sales side, not so much on the technology development side. I think they've got a core group of people that's like doing really phenomenal work, and those people are probably the highest equity, compensated by the highest levels of equity. Sales is probably the least, and then in the middle you have deployment people that are probably right in the middle of that. So that's what I would say. You have developers that are doing product development; they're probably highest level of stock-based compensation. Then the middle is your deployed engineers getting a little bit less than them or half of them. I don't know what the total statistics are. And then the salespeople, like, they'll probably get a little bit of equity, but not nearly the amount as the early developers do.
No, they will not. They will not.
Yeah, I say, and I think so. For that question, how's it going to affect SBC? It's really not. Like a top tier engineer is going to get way more levels of equity and options versus a salesperson. And one of the things that's important to understand is that if you hire salespeople, they're going to bring you new business. Theoretically, that's why they're in sales. So yes, you're paying more commissions, but the whole structure and logic behind commissions is that there is an intrinsic human incentive structure for this person to go drive me business. So if I know that I'm going to get an extra $20,000 this month if I close 7 contracts of $2 million or higher, I'm going to work my butt off to get those 7 contracts of $2 million or higher, which is what, $14 million of revenue to the company, which is 20,000 extra for me. Like, there's a very good incentive with those sales relationships. It's just a question of how well they can manage the amount of salespeople they're hiring and the amount of commissions they're paying. But the more commissions they're paying, the better, theoretically, because that ultimately means that there's going to be more growth. And again, one thing that cannot go overlooked is the Philip Matthew hire. This guy led $16 billion of sales in Oracle in a particular region. This person now, Sham was basically talking to him on the press release, and he said, this person knows how to scale sales organizations. So it's not Palantir out in the wild doing this. They got someone, and they probably gave him a lot of equity to be able to do this. And in particular, this person understands the business relationships that are required to be able to cultivate a sales culture. And Palantir has no sales culture. They have an engineering culture. So you need someone like that to be able to manifest that. And that happened in January, right? So I think the results of that we're going to be seeing over time and ultimately see what happens. So Baron, he's in the chat. He says in capital letters, I told you this would happen, $10 coming. For all the people that are like Baron who say in capital letters, I told you this was going to happen, the stock price is going to drop. This is the type of short-term mentality during earnings that's probably not the most productive, right? Now, if you're not long the stock of Baron, I don't know if you're long, you're short, whatever you are. If you saw $10 was coming, as Sachin always says, why don't you short the stock? Because if you knew $10 was coming, then you should definitely profit off of this $10. These are the type of comments that I think for the longs that are here that are looking at, you got to kind of brush off your shoulder because they don't really do much for us.
Man, in hindsight, everyone is at Thorpe. They knew everything what was happening. Okay, yet people don't make money. You can be wrong on 100 things. I mean, I get wrong on 80% of my decisions and still make money. I think I'm happy this way rather than being right and lose money or don't make money. So guys, be honest with yourself.
And when Sachin says he makes money, guys, he was telling me and Kris yesterday a little bit of his private investments. And let's just say, when his private investments cash out, it's paper money right now, but when they cash out, he will have some more dry powder to buy Palantir shares. Let's just say it like that. So Sachin knows a little bit about making money, and he's still wrong a lot of the time, right?
Guys, just remember, this is pre-market. If literally the stock is all based on pre-market, bro, pre-market is an indicator for what early sentiment is, not necessarily for what we are going to finish at the end of the day. Let me keep reminding you guys, look what happened last year when the stock dropped to 17 and then quickly bounced to 21 by the end of the day, right? We haven't even heard from Carp yet. We haven't heard from their pitch for what's going to happen. We don't know if they're coming up with any new revolutionary product that may end up being really, really good. So right now, it's still 7:30 in the morning. Yes, there's some people that are probably like in pre-market trying to sell off, but don't expect that to be like, oh yeah, it's off 10% in the morning, so it's going to be off 10% by the end of the day. Who knows? Who knows? My expectation is it'll probably get back to where it was trading yesterday by the end of the day, but we'll see. I have some puts that I sold for $13, which right now I'm still banking on because I almost got like 90 cents in premium, so I'm cool either way.
Guys, in Q2 2020, Sham said 30% growth and numbers and have not changed from that. So in theory, things have only confirmed what Sham said in Q2 2020. The stock has gone down from 25 to 12. It was more driven in terms of growth market macro. So at this particular point, if you are saying the stock has gone down from 25 to 12 because the story has changed, guys, no story has changed. Story could have been better. I agree on that part. Okay, story hasn't changed. We want a better story. We know what are the issues with Palantir. We discuss with them. We discuss with you. But the stock hasn't gone down because story has gone sour or somebody else is doing well. I mean, man, most of the companies in this market is doing pretty bad, especially if in a growth and tech sector. On top of that, we discussed there's a company that comes with a certain stigma and certain categorization by mainstream finance media. So please, I mean, if you think that the story has gone bad, I mean, what you are doing in this stock at the first place? I mean, the company has said something and they are consistently beating. And this is, I've said in my investing thesis several times, you need to listen what company is saying. Are they consistent in saying the same thing? Are they actually executing what they are saying? I think people listen a lot finance media. They listen very less what company says, and they listen very less what their clients are saying. Are their clients saying Palantir is a bad company? I mean, look at the testimonials they have made. Look at the quality of clients they are having. Is anything happened that what they said that will not happen? I mean, they're just following the line. Why we are sometimes disappointed? Because we are so passionately invested in the company, we want it to do more than what they are actually doing. That's pretty much it. Back to you guys.
Yeah, I mean, I 100% agree on that. When Sham said we're going to grow 30% and they were at 25, now we're at $12 and we grew 41% year over year. This is where we're saying the stock price does not match the reality of the company, the growth dynamics, which were bound to happen. $45 in January 2021 after a couple months of being public. It was absolutely insane, right? Everything was insane. It was bound to crash. It crashed really hard. No one knew when the crash was going to happen. So some of us bought shares at 25, 24, whatever. We're all down. We're holding the bag. But the key thing here on this earnings is, did they grow at a level that we think is pretty decent? And I think pretty decent sums up the level of this earnings. It's not pretty bad. It's not pretty phenomenal, but it's pretty decent. And in this market, all we can hope for is being pretty decent. Look at what happened to Roblox yesterday. Roblox got pretty much everything right. I think they missed on like 2 metrics, and it wasn't even by a lot, down 20% or 25%. Pretty bad, right? So like I think for the market, rewarding it to only be down 8%, I think is okay. And again, it's pre-market. We'll see that. Let's read the super chat. endthedrugwartoday.com, $20. Really appreciate the super chat. They comment a lot on my videos. I don't know their full name. Their comments are very interesting. They definitely get me to think. Just bought another 800 at $12.75, bringing my total to 6,000 shares at a $17.24 average. I blame Tom Nash, Amit, Kris Patel, and Alex Karp's Magna Carta Feb 14th love letter to investors. We are going to take over Facebook and Google. Well, I want to talk, first of all, thank you, and thedrugwartoday.com for that $20 donation. 6,000 shares, amazing. I want to talk about that last sentence, because this was really interesting. We have 20 minutes before we get into Alex Karp's call, before I talk about that last sentence, guys, please check out the description. Kris Patel and Sachin's YouTube. Please give them a subscribe if you haven't given them a subscribe right now. Sachin and Kris make amazing, amazing content. Our Twitters are also in the description. We talk about Palantir pretty much 24/7 and other stocks. Sachin was theorizing about Facebook last night and their problems, so please follow us there. Now, we are going to take over Facebook and Google. Karp just released a letter about elite Silicon Valley technocratic companies. What are your guys' thoughts long term on the potential for Palantir to be just as valuable, if not more, than those two tech giants?
I think
Google. Oh, sorry. Go ahead, Sachin.
I think Alex has made their intention very clear that they are going after. I think Google is where the showdown is likely to happen. I think the signs are there. I think Facebook has their own things to manage at this particular point. Facebook doesn't have any significant presence in B2B market. So there is no comparison or there is no fight with Facebook other than the revenue or the size of the company at this particular point.
However, so Sachin, real quick, when Sachin says they have no presence in B2B, that means you're saying they are only a B2C company, meaning if they don't keep users' attention, they don't matter. That's your argument, correct?
That's true. And so what will happen is there are two kind of things I expect. I expect people who are pissed off from Facebook, they want to create new, more responsible social media company. And these are the kind of company that can come under sometime Foundry for builders. And Palantir can help power these companies. That is one thing. I think showdown with Google is on the card. It's always a question of when, then if, and it's going to be bloody and volatile. I mean, Google is not a kind of a company that will go down easily. They are one of the most innovative and strong company, and they are kind of the lord of Silicon Valley in terms of managing the culture, which is Palantir has declared open war against. So Google and Palantir is a definite showdown. And if you see in terms of their strategic partnerships, they have some partnership with AWS, they have some partnership with IBM, but Google is one company. They are openly and very vocal what they do, and they make it very clear we are not going to do it. They call Google several times, even in the last letter, even the last German interview they have done. So Google and Palantir, I mean, it's a war to watch. Kris, up to you.
Yeah, I think Facebook, to be fair with you guys, is almost sort of a cancer on society. Like, to be honest with you, seeing the changes at first, I thought the benefits of social media were amazing, and I think for the most part, those benefits have come at a cost. And I keep saying this to anyone who I talk to. I said, Facebook went from selling insights into selling influence, and that's where we're going to run into a lot of problems. Because when you're trying to influence things and you're trying to silence people, that's not going to end well for you, because eventually those people that you silenced will get into power. And when they get into power, the first thing they're going to do is they're going to come after you. These big tech Silicon Valley companies, they've been autocratically dictating to the public how they should operate. To a certain degree, I agree with some of their policies. Some of the things that they're saying are actually good, but I am always of the mind that people should be allowed to freely choose what they want to do with their things. I think right now Google and Facebook have become way too dictatorial, and they've become almost an echo chamber, which I think is ripe for a big smashing sooner rather than later. Big tech regulation is already happening in Europe, and I think it's coming to the U.S. I think the U.S. is slow to move on it, but I think eventually when it comes, it's going to be like a sledgehammer in the backs of Google and Facebook. I think right now, Google is taking some measured steps. Like, I don't know if you guys saw the news with Android sandboxing, what they're trying to do with giving third-party marketing information to people, because they see if we don't change ourselves, we're going to get killed. Now, here's the thing. Their business model is built on that kind of logic. So how are you going to pivot away from that? Google has failed miserably on a lot of projects that it had tried. Like, think about, where's Waymo right now? Tell me one car that has Waymo integrated. You can't, right? It tried its hand at social media with Hangouts, did not work out. So
Google Plus, right?
Whatever.
I minused that Google Plus from my life after like 2 days. That was
yeah.
Granted, I was 13, but like I didn't get rid of Facebook at 13. But
yeah.
When in government sector, there are many companies in which the Facebook is blocked. That means you cannot access Facebook on the government on the internet, the Wi-Fi within the compound. And this is a challenge I think Facebook has. See, it's a good company. It changed life. It kind of revolutionized social media. So we cannot take that credit away. The question is, what's the direction looks like now? It needed to handle the data responsibly, which at times it has failed. We categorize Facebook in the FANG stock category, but you need to understand in the FANG stock category what Facebook has done. Like most of the, like if you see the Apple now, if you see Microsoft, if you see Google, they are increasing their B2B, they're innovating new products. What Facebook has done, they went into this kind of bullying and acquiring companies. They are saying now the metaverse. See, at the end of the day, metaverse, when we talk about it, it's all about AR and VR in general. VR is more immersive, and people who are going to spend more money on immersive AR and VR, they are the large industries which are high impact operations, and gamers who are more the altruist in terms of amateurs who are looking to invest money. The challenge for them is that Facebook, despite having all the access to their large social crowd, they do not have access to this category, which is going to spend a lot of money on that part. So, will they succeed in metaverse? They can, but there are going to be bigger players in metaverse and far more successful than them. So, telling and branding metaverse to Facebook, yeah, it's a marketing stunt. They may make money, but if they were going to make money, then there are companies which are going to make a lot more money than Facebook in this category. Back to you guys.
There was one thing that I just saw in the comment section. Someone says Facebook and Google are going to grow no matter what, right? I just want to say, where's Standard Oil? If anyone here knows what Standard Oil is, Standard Oil was the largest oil refining company in the world until they got to the point where the government said, no, you're too big. It's time to start cutting you into pieces. And I think right now, big tech has been unregulated to the point where they've gotten way too big, way beyond what a lot of governments are, for lack of better words, willing to accept. And I think, like I said, legislation eventually will come down. Google will maybe grow, who knows? But guess what? They may not grow in the form that we know. That's what
No,
I
this is
think anyway.
no, this is the reason that Silicon Valley controls the life and narrative for everyone else in the whole world, because they want to control the media, they want to control the government, so these antitrust regulation don't come to them. This is exactly one of the reason that whenever anybody call them, they always like this kind of a troll army that is unleashed. See, we have to be very objective about it. Google is a great company, okay, but Google has a position on social topics which is very uncomfortable with several people, okay. The consequences will come one way or other way. Either Google has to change, and at the end of the day, when you have too many portion or too many components within a large conglomerate, remember that companies are not easy to value also. So when that curtain goes down, sometimes these companies can see a very large drop in their valuation. Okay, so there is always a risk. Google is investing in technology, that is good. They are increasing in B2B space also, but they also have a lot of reservation in B2B space, because they say we do not work with this country, we do not work with this industry because it is evil, we do not work with government because they are evil. I mean, if you start picking things, people will not disappear because you don't want to work with them. They will work with somebody else, and people feel about it, and they will come back to you. And sometimes these people goes in power, and when they go in power, they come back to you, and they actually make you see consequences as well. So let's see what happens. Okay, we are not saying these companies will disappear, but considering that these companies will not disappear is also not fair. Things can happen depending on how the next few strategic moves happen, both in terms of government as well as in tech sector. So let's see.
I have a quick question for you. Someone said in the comments, "Oh, you guys are saying Google's bad, but you're doing this on YouTube." So I kind of want to resolve this. YouTube is an amazing platform. It gives us an audience, gives us content, all of this stuff. So can one of you speak to, like, YouTube is good, Google search is good, but the macro of the company is what you're saying is under a little bit of pressure, not necessarily the product of YouTube that the entire world uses every day.
So see, like I said earlier, the Google in terms of technology and innovation, how it has touched everyone's lives is good. See, when people say, I mean, when people like me say that Google is not good or bad, I mean, see, a company is using their position and data in a way they deny they are using it. That's the problem. They use your data, A lot of time regulators find that they were reading your emails to find, so they are using their influence and position to bully small companies, or to actually straight away sometime lie. Sometime they invest money in the causes to draw certain narrative. That is bad. I mean, this is the reality, man. World, nothing, nobody is 100% good and nobody is 100% bad. You have to judge it like that. Google technology, Google influence, a lot of things Google is doing in terms of growth, it's absolutely something we should give them credit. Their Google Cloud is one of the cloud platform. I mean, I've heard the best feedback from all the clients. No one has given that kind of feedback for AWS and Microsoft. Everyone says Google Cloud by far is best. But we also have to be clear that they have very strong position. They use data in a very irresponsible way, and they denied that we are not using it that way. So where it is bad, it is bad. We also have seen very clearly in Silicon Valley that Silicon Valley has developed this view where until and unless you are speaking a particular narrative, it is free speech. The moment you change the narrative, you are an evil person. So that is also something being promoted by big tech, including Google. So in my view, that is against free speech. Okay, it could be free speech for different people, but that's an opinion I have to make. So in that way, Google is a great company, but they are not as responsible or as honest company a lot of time as they portray. Back to you guys.
I think the technology is what everyone is always going to be bullish about, right? We're not going back to the world where we start not using Facebook, not using all these platforms. I think the problem is, and just like Sachin said, in the background, how nefarious the use of the platform is. Like, and it comes right back to in the social dilemma. If you guys saw it, like, are the companies viewing us as customers, or are they viewing us as products, right? I don't want to be a product. I don't want to be turned into some kind of commodity that gets freely traded in the background between companies, right? I don't think anyone wants that. I don't think anyone really cares for that. So I think what it is that the technology is good, but at the same time it's a double-edged sword, right? And that's the same argument that I think can be made to the likes of Ross Gerber, who are saying, hey, Palantir is taking all your data and selling it. And it's like, wait a second, what? Like, dude, Facebook and Google are doing that, not Palantir. So how can you accuse Palantir of that? It just
Speaking to that, Kris, let me read
Yeah.
the super chat. Speaking, and that goes in line with your question. End the drug war today says, are companies like Facebook, Google, CNBC? Go ahead.
I mean, just click on that comment. It will display on the screen for everyone.
Oh, perfect. Wow. See, this is why technology is cool.
Guys, remember, YouTube is not charity. Google is doing YouTube to make money for themselves. Yes, you are getting benefit out of it, and we should be happy for that. But that is also allowing a lot of other video platform companies to come as well. So do not think Google is doing YouTube as a charity. They are doing it and showing it as a good, but at the end of the day, they are making almost half the money. All that revenue comes on it, even more than that, because everybody doesn't get paid around it. So no, they are not doing any charity, guys.
Are companies like Facebook and them and other data miners attacking Palantir in the market because they know the level of competition Palantir will bring when Alex gives us back our data? It's a good question. It's not just attacking Palantir. There's an entire, and some of you may know this if you're in the tech space, particularly on Twitter, Web3 movement of decentralizing central aggregators of data, right? So using blockchain technologies. If you look at some of the highest ranking members of Google and their Twitter accounts, they are constantly tweeting about why cryptocurrency is a scam. I'm serious about this. I think that the guy's name is Leslie Hightower or something. I'm going to look it up. I'll put it in the chat in a second. Every day, he's just like, crypto is stupid. And he has some good arguments. I'm not going to lie. He has some decent arguments. But these people have their biases at the end of the day. We have to take that with a grain of salt.
See, we saw the case of Facebook, like Reed Hastings, showing that he responded to Peter Thiel on his endorsement of Trump. He literally said it's a bad decision. He could have said that I'm sad with this decision. But see, in a democracy, you cannot declare things like this, because if you're a company, and this was discussed within the company board, okay, they didn't discuss like what kind of influence it brings. They said it's a bad decision, it's a bad move. Okay, so when they did it, they actually kind of violated his personal freedom and his personal choices. Do I agree with Peter Thiel's choice of Trump? No, I don't agree with that. But that is not my place to call him for that.
Amit, click on the box again, so this way that chat thing will disappear.
Okay.
I mean, the other thing that I'm not a big fan of, and I think I think Alex really highlighted, is how openly Google is to working with the Chinese government, right? Like they're clearly an adversary to the U.S., yet you're willing to work with them, but not the U.S., the country that almost birthed you and protects you. So that's the other thing that doesn't make sense. Like, how do you go from saying "don't be evil" to supporting kind of like almost a dictatorship? So that's the other thing. So there's a lot of hypocrisies in the way that Google, and it's all of Silicon Valley, to be honest with you. On one hand, they say, oh, we care about all these moral issues, but then once you leave the shores of the United States, all those moral issues, they disappear. It's like, no, China can do whatever it wants, no problem. The other countries, they can do whatever they want because we don't want to lose their business. So it comes down to that hypocrisy that it's just not something that I enjoy.
Who has the music in the back? Oh, that's me. That's me. What was I gonna say? Yeah, and I also think, guys, YouTube's not going anywhere, right? YouTube has 2 billion people per month using it. Facebook has 2.9 billion people. Like Facebook, it's not a question of if these companies are going anywhere. It's a question of over the next 10 years, where is the growth potential? So you can love YouTube. I mean, I obviously love YouTube. I use the platform. I'm building an audience on the platform. Same thing with Twitter. Twitter is a centralized thing. They have their own censorship problems. It is net better than us being able to go advertise our videos in a supermarket and be like, hey, can you watch my videos, right? We have an algorithm that does that for us instead. That is a net good. The question becomes when a company is already almost $2 trillion in value and you have Palantir at 27 billion. Over the next 10 years, if the emerging trends are going to be more data privacy and more focus on using data analytics, not necessarily having the data to become a valuable company, where do you want to put your money? And the three of us here, and I'm assuming, a decent majority of the 500 on this live call today are saying, hey, we think there's a better 10x, 20x opportunity in there. If Google were to 10x in the next 10 years, we're talking about a $20 trillion company because it's at 2 trillion, right? Like, do we think that's going to happen? Now, the bull case is, well, who's going to beat them at search? The bear case is like, well, people don't really like being tracked on search anymore. So it's like, it's one or the other, right? And the Palantir bull thesis is like, well, every company's producing a shit ton of data. Someone's got to make sense of it, and they have the best tech to do so. Is data going to stop being produced? No. Is there going to be companies that try to make sense of that data? Yes. Who's going to be the best company? And then you talk about leadership, all that stuff. So it's a question of where do you want to put your money versus just Google and Facebook are evil for society, because they're not the worst things, but where's the growth potential at this point?
This is something what Bootstrap and I discussed, like in 15 years before. People didn't have data. So getting data 10, 20 years ago was a privilege. Okay, now you have so much data. So data itself has not that much value, as much value that extracting insights out of data. So things are shifting. I mean, there was a world when data access and data privilege was more important than extracting insights out of it, because the insights you were looking were very simple. Now you have a lot of data, but you need something very complicated out of it in terms of insights, and everybody else is using data as well. Okay, so it's more on data insights now rather than access to data anymore.
Yes, the call is starting. Let me share my screen. Let's get this going. Everyone can see full screen, correct?
Yep.
If I do this, it's full. We're good?
Yep.
Okay, can everyone hear? Everyone can hear that music, right? Yes, did you guys hear it?
Yeah, we can hear it. Go ahead, man. Press play.
Okay. So I'll start it again in 2 seconds, because I think it's going to start then in a minute. Any quick expectations on what you want to see on this call?
New product, baby. Let me get that Valhalla. What's up? Let me get that Valhalla.
I agree. I mean, my concern is new products. I want to see more products. I want to see more modular products, and I want to understand what's the go-to-market strategy for that. I want a product that clients can make their mind in 2 minutes to buy it.
Okay, I think that's good. I want to see what Carp's got to say. If he's answering questions, then this is going to be fun, right? This is going to be interesting. Like, we've only seen Carp. Has he never been on the call? Correct me if I'm wrong. That's correct, right? Never been on the call.
I don't think
He
so.
has never been in call answering questions. I don't recall.
Yo,
I don't
shout out
recall.
to my boy Tom Nash. Hopefully we get that B2C product. Who knows?
Yeah, I mean, I don't know if we're getting that yet today, but this is gonna be interesting. We have never seen Carp really talk to shareholders in this type of call, so we're gonna see how how does he handle it. All right, I think we are starting.
Good morning.
There we go.
Welcome to Palantir's fourth quarter 2021 earnings video conference. We'll be discussing the results announced in our press release and related materials issued prior to the market open and posted on our investor relations website. This morning, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our first quarter and fiscal 2022 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed prior to market open today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's earnings video conference, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for, or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and SEC filings are available on our investor relations website at investors.palantir.com.
Welcome to our earnings call from Denver. It's my maiden voyage. Obviously just a couple opening remarks and then we'll jump into questions from the audience, as it were. Just a 5-minute, 2-minute. When Palantir began, people believed that data was worthless, that software was a luxury item, and that we would fail. One of the very interesting things that's happened to Palantir is we've been able to see how the world has changed dramatically in its perception of software and, of course, of us, from a world where software was something that you might want, might be in your car, but de facto would not determine your business, to a world where really the laws of finance are going to be rewritten to deal with a world where the only real moat is software. How do you measure it? What does it look like? How do you understand when it's creating value? How do you understand when it's declining in value? How do you understand when it's compounding? To what extent is it compounding? What devices do we use to measure that? Are the devices we use to measure it the ones that we used in the past? Clearly, this industry is in its infancy. What's also very special about this industry is it really is, by and large, geographically located in a small section of America, which is odd, and there's lots of interesting reasons for that. But enterprise software is something that America is by far the best at. What we see currently at Palantir, it's not just the best at building it. It seems to also be the best at understanding what software developments are relevant for the world today, and adapting even when it's being offered by a company that in every way looks non-standard, run by people that are very different, look different, feel different, talk differently, and with a CEO that many view as batshit crazy. Just as an interesting prelude, I don't want to take a ton of time with remarks because I think, when I'm watching these things, if someone talks too long or there's like a lot of canned remarks, I wonder why. And it honestly gets a little boring. Of course, our legal department and IR department, which are wonderful departments, have a cane ready to pull me out if I'm not like a caged animal in the 1950s zoo. But as I've mentioned to them, if you want
I love it. That's hilarious. What CEO says batshit crazy on an earnings call? I love it.
Caged animals in the 1950 zoo. You can watch any other earnings update. So here you see an interesting chart. We sent this out. Some of you have probably looked at it. Some have maybe even studied it. Some of you haven't seen it. What's interesting here, what I thought would be very interesting for people who are investors, potential investors, also Palantirians, both current and ex, is our journey. And what I actually believe this is a metaphor for the journey of all software companies. We were very early into whatever you want to call it, data exploration, building things that that would now be understood as useful software for building analytic tools. Some of them were and are very, very important for national security and other areas, but then we're not, obviously, because they were built and conceived in 2004, delivered in 2008. We're not actually able to migrate across the chain into what people need tomorrow, or people are already seeing that they need today, which is essentially not having software as a raw material exploration. You take the data like it's oil, you pump it out, you churn it, and then you say you've churned the data and you move on, but actually operationally determinative for your business. What you see here is cohort analysis. This is and what you see is from inception of Foundry, the decline of older software products and just the massive exponential growth. Obviously, it's rough math, it's 100% growth year on year. And then starting last year, not off of a small integral, which is obviously very important because, small numbers can grow quickly even if the software is not strong. Big numbers don't grow quickly if the software doesn't exist, especially given that our sales force is super nascent. We're building it quickly, but we only have 25 fully accredited software. Fully accredited meaning they've been here for 9 months or more. And what you see here, obviously the CAGR here is just unbelievable, and in like the 150 plus range, which is super interesting. And I wanted to drop the F-bomb here, but I was told that was probably inappropriate. But you could definitely, we've agreed that this is something like the Phoenix rises. You don't get this. And the other thing that's kind of anti-gravitational about this, that it's easy to forget. This is a company. This is like, we've been at this for over 15 years. There are certain laws of nature in business that we are defying, which is that a software company, software usually decays for lots of reasons, decays radically. And so when you see a decline or a software product, it's also basically not part of the law of nature for a software company to build new software. Really, as far as I know, we are the only software company in the world building transformational software this far in. And that's particularly important because most software companies have distribution or they have a product, but they don't have distribution, product, and ability to build new products, which is not a critique. These are great companies. They acquire companies. There are not that many companies to acquire, which is why even relatively weak companies get acquired at a very high price. Let's just look at the next chart, which is USG. USG, you have a very similar phenomenon where you see the inception of Foundry into the USG. There's a lot here. There's a lot of qualitative stuff here that we can't explain. But one of the qualitative things that you kind of can get a sense of is Palantir, the newer Foundry version, not only grows dramatically with this is like 65% growth. It just without looking at it, more precisely, but it's like over 200% CAGR here, which is also like Phoenix rises kind of thing. But what's qualitatively particularly important and very protective is this graphs pretty neatly onto what are the programs that are going to grow tomorrow. Where's the future of USG? What do we need in a world where people are recognizing it's very dangerous? And what would the products be that you would need to power that? So in any case, with that, I think we should head into questions.
Great. Thanks, Alex. Our first question is from Brent Thill with Jefferies. Brent, you'll receive a prompt to unmute, and please ensure your video is on.
Thanks. Good morning, Alex. when you go back to the sales,
By the way, we
expansion
can't
opportunities,
see you.
talk through your overall view on what you need to do on the sales force to get that building in the right direction, and what your plans for capacity are in 2022.
By the way, it would have been wonderful to see you. But yes, I think the question was, what can we do to build on our building the sales force next year or this year and the next year? So there are really two parts to the question. One part I think is just to look at what's happening. And so like what is growing Palantir now and how can we accelerate it? So if you just, what I want to do in this call and in future encounters is to kind of what I think is happening, and you just to frame the question, what I think is happening at Palantir is you have what you saw in Silicon Valley 1.0, when Silicon Valley actually produced goods and services that people wanted, which was they built dual use products in government, and there was a handoff to commercial. And so that's going very well. So you see, even if you adjust for SPAC, organic growth in commercial last year, US was 80%, or just under 80%, is like 76, 77%. But to your point, so and you see net dollar retention numbers that you financial people like. How much is it growing? What I would call actually organically, what I guess you guys call net dollar retention, very, very strong, like in the 150 range. We have Glazer here; he'll pipe in with but it's roughly in that range. But what we do not have, you could look at it as a negative, is like we basically are doing this with a very, very nascent. Honestly, if I were not on TV, I would say bonkers small sales force. And so like that means two things. What does it mean on the positive side? It means that net dollar retention number is awesome, because my understanding of how this happens at other companies is like 8 people running around begging the person to expand their deployment. That's not happening at Palantir. The salesperson there is the Foundry product by and large. So obviously that means we think we can get lift from hiring salespeople. We're doing that aggressively. I think we have about 150 salespeople now. We're in the market to hire aggressively across Palantir. Honestly, mostly not salespeople, because we believe we live and die based on our ability to build products of today. But we're hiring in the range of 200 people. Hiring and getting value out of them are two different things. And so I think one of the things that we will see going forward is how do we play these salespeople so that we can get as much lift from them as we're getting from the product itself. And we're at the beginning of that. And so it is the people we've fully indoctrinated, or as normal people might say, trained, are effective, but we've never done this before. There'll be that's a process. We're also looking at ways to learn from other companies, but that's going to happen over the next couple of years. I think the primary driver of revenue in U.S. commercial this year will still just be the way in which America, the IT organizations are actually beginning to request, without knowing Foundry sometimes, what Foundry offers. The CEOs assume that this is available. There is no other product on the market that can actually move from, data warehouse, which is like, there's like 5 companies, they all offer the same thing. Foundry interacts with all of them. When you want to move up to the chain to actually solving a real problem because it's defines your business, Foundry's highly differentiated. So we will layer that. I think it's way too early to know exactly the impact. Obviously, to the extent we get this to work, you could expect even higher growth than what we have. Although, I'm very happy with it. Was like we've doubled US commercial now, from 50 to 100, 100, 200. I believe we will double it again this year. So, in any case, some of this is unknown, but we are working very aggressively. The other thing I would say outside of the US, again, a slightly longer answer, but one of the ways people look at Palantir is, if you're going to, I think a financial analyst likes to, what we would have called in science, normalize the data, what you in finance would probably call strip out the inorganic inputs. But if you're stripping out the inorganic inputs, you also have to look at what I would essentially view as an inorganic input of COVID in Europe. If you strip, and so Europe has been slow for us last year, which is one of the reasons why, we were only at 41% last year, and growth would be even higher. Europe grew, if you include SPACs, at 9%, so slightly above what's probably inflation. But there we're taking the opportunity, believing there'll be a handoff from USG to US Com to Europe to rebuild with some very, very strong salespeople who've come from the best companies, believing that that's an environment where we can really do that. So like there's two ways to look at this. Just on that angle, you could say, well, what could you do to gas charge America? We're working on that and very, very aggressively. And most of our sales hires today are focused on that. But there's another more long-term thing. If we're right that the world wants Silicon Valley the way it was, meaning a handoff from government to commercial to the rest, commercial US to the rest of the world, and with each one with a lag, America to Europe, 18 months. The rest of this company only has to grow everything besides Europe, commercial 38% to get 30% growth in aggregate. So getting Europe to track better, both from a handoff of what happens in America to Europe and with more conventional sales approach is kind of what we're looking at getting done this year and see the fruits of it next year.
And just a quick follow-up on the government. I know you had a tough comp. It did decelerate pretty materially in Q1 in terms of the growth. Can you give us your perspective, what's happening on this?
Well, there's a couple things that are happening there. So if you were looking at this more like from a scientific perspective, you had a time series that's 15 years. First thing you would do is say, okay, what's happening in that time series over the 15 years? What you see in US Gov is a compounded growth of 30%, but like this, which is, the positive of US Gov is it's reliable, the sums are big, the quality of the revenue is very high. There are a number of problems, but biggest problem is barrier to entry, which we've clearly solved, and then barriers to entry, which we've solved or are solving, but that's going very well. And then the second one is lumpiness. Now that lumpiness still exists, and actually in some ways it's worse because to get the integral to grow, you need these massive deals. We also have small deals, but de facto we are on the biggest, most important parts of the U.S. government. Our software is. So there's really a twofold answer to your question. One, what will happen this year? Is the deceleration an actual one over a long time series? The answer is clearly no. But then the question is, if the baseline is 30, how does it get to where we want it, which was like the beginning of last year and not at the end of last year? And the way that happens is the deals were already positioned to win actually close. And so then you get into the granularity of what will happen in the U.S. government, who gets the deals if there's no new budget. There's a lot of granularity there, which we should probably do a better job of sharing. But the short answer is it's like whose chair gets pulled first. It get the people who are trying to enter the market first, last. So the new startups totally screwed because the people who are not sitting on crucial programs partially screwed. The people that have software that is or products that are useful in the past but have the right connections probably do. What's another version of this is if you just look at that chart I showed you with the CAGR on Foundry, these are the most important programs for a dangerous world. Now, can't go into all the details, but we used to debate with people, especially my academic friends, if the world was dangerous. The danger of the world being clear and present to the U.S. government is very protective. It doesn't guarantee that, when this integral actually how it behaves, but it makes it much more likely that it will happen in year and positively affect our revenue, which is another reason why I suspect that we will do well.
Great. Thanks, Brent. Our next question comes from Palantir shareholder Chase P.
Yeah, thanks so much for fielding my question. I really appreciate the opportunity. First and foremost, congratulations on all the hard work. It seems like you guys have a great team and are executing really well. From a retail investor perspective, the most negative sentiment I hear regarding Palantir is in regards to the dilution of shares outstanding over the past 12 to 18 months, and primarily in relation to stock-based compensation that's occurred. Other than the remaining shares to be vested that have already been announced, can we expect further dilution and share offerings going forward? Or is it kind of reasonable to assume that the majority of this was from the IPO process and sort of a one-time event for the company? Once again, thanks and congratulations on all the hard work and business developments.
Thank you, and I really appreciate you, investors. Thanks for investing and the faith you have in us. Okay, so there's like the simple version, which I think, it's like, so there's stock-based comp and there's dilution. The dilution thing, that's a red herring. We're not issuing a lot of new shares. I think it's like in the $9 million range, and so it would be a little coy of me to say that's like no issue, move on. The thing to understand about Palantir, and then I want to just hit this, is like it's actually not the result of the DPO. It's the result of the fact that we were completely focused on building product. We had no earthly idea we were going to DPO till like right before we did it. And so most companies are, I mean, quite frankly, built so that when analysts look at it, the primary customer of most software companies is not the client, it's the software analyst. So it's like we obviously, our primary client are our clients, which doesn't mean, now we're thinking about how do we expose the data in a way that, people on the outside like you and professional analysts and others can look at the data and get a better sense of what's tracking, what's not tracking. But the primary source of a lot of these like questions really comes down to, look, we built the company to support the U.S. warfighter primarily, and then dual use it for the glory of humanity, particularly humanity in the West. That was our idea. And because our primary client was not what someone at a hedge fund would think, we didn't actually think of these things from. So now there's a process in going for calls. It's like, how do you normalize? How do you provide data that people can look at? How do you provide data that people can understand, that they're used to seeing, while simultaneously staying true to what our mission is? It's like our primary clients are the people we're serving. We're in full line with them. And that's why we survive. Even with the nascent sales force, you can get things to double, which is insane. So then you get to stock-based comp, which is like, okay, so there's two parts of it. Of course, IRI people kind of don't want me to do any kind of forward-looking math, but if you're smart enough to invest in Palantir, you're smart enough to figure out there's essentially there's the how are we comping people, and there will be a normalization that will get us into a range where you would see in a software company within the next 18 months, latest 2 years. But there's essentially, and that's going to take a little time. It is going to happen because it's also very much linked to another question, which is how do you actually run the company so it's profitable someday on a GAAP basis, not stripping out comp, and that is also within eyesight. And those are goals for Palantir, because same reason we have no debt, same reason we have $2.3 billion on our balance sheet. Yeah. This is a company built for bad times. Bad times mean strong finances internally, and that means at some point you have to be GAAP profitable. You can't be GAAP profitable if you're diluting people or correctly. Your stock-based comp is totally is not in conformity with other companies. So you're seeing a normalization. This will change. It will change in the relatively near future. It'll be linked to other things that we believe are important for Palantir, like having a company that thrives in bad times. And we are. Bad times are very good for Palantir because we build products that are robust, that are built for danger. And then the finances internally are actually built for bad times. And bad times means you have free cash flow. The free cash flow turns into GAAP profit. That means the stock-based comp has to be one that's aligned with our investors. Also, because that's basically, it's part of a little bit longer philosophical narrative. But like, if software is the only moat, then value and gross shares have to be evaluated in terms of their value. Value only exists if you can actually get a tech moat, call it, that maybe it's something besides. And growth only exists if you build a company that is where the technology is strong enough, the business fundamentals are strong enough that the free cash flow actually turns into GAAP profitability, and that's linked to stock-based comp. So this is a priority both because you care, but also, quite frankly, because it is the health of our company, which we care a lot about.
Great. Thank you, Chase. Our next question is from Keith Weiss with Morgan Stanley. Keith, you'll receive a prompt to unmute, and please ensure your video is on.
Excellent. Thank you guys for taking the question, and thank you, Alex. and
hey, neighbors in New Hampshire.
Upstate New York. Close. So two questions. One on the product side of the equation. And the other on sort of investments into 2022. On the product side of the equation, Alex, maybe I hope you can help us So to better understand the product roadmap on a go-forward basis, how you guys are thinking about it from a high level. From our perspective, you guys did a really nice job of better modularizing the platform and made it more adoptable by commercial enterprises. And I think it looks like we've seen that traction in terms of customer adoption. What's kind of on a go-forward basis? Is there more activity of that ilk, if you will? Do you create more pre-built solutions, if you will, more directly target some of these sort of opportunities that you've been used for, but productize it, if you will? Is that a potential product direction? And then on the other side of the equation, in terms of investments, investing for growth into 2022, I was hoping you could give us a little bit of visibility into the nature of those investments. Is it just sales headcount? Is it the forward deployed engineers? How should we think about where those dollars are being deployed? Thank you very much.
Thank you for your question. And so actually, to my perspective, they're very much linked. Our primary investment in growth is investment in product. And we're doing a number of things in product. The things we've talked about at a general level is kind of making our product more modular. There's a slightly more macro riff here, which is that we were adversarial with IT structurally until recently. We were adversarial because from our perspective, there's a learning process where they had to build these things. Now there's a myriad of companies. They're all honestly technically hard to indistinguishable, doing data lakes and all sorts of things that help IT people build something that is working for them to do certain things. And we were adversarial because they were like, okay, this Foundry thing, yeah, great, but we've already built these things. You would replace this. It honestly could also make us look bad. No one wants it. Also, the average sale price for Palantir Foundry across our business, I think last year was like 6.5 million. Most IT people prefer a small bite and consumption. You can argue whether that's the right model, but instead of fighting them, it's probably better to figure out a way to get our product more in their hands. So that's kind of the known part. What we've been working on recently, which is less known, is what we're really working on is we believe that people are paying a lot now for consumption and compute. No critique. But in reality, that's very much like paying for gas and oil exploration. But what people are really going to want is the ability to use the fully digested product. It's like when you drive your car, that's minerals and oil products and all sorts of chemicals built into your car, finished product. So, and we're going to build both modules that are reflective of Foundry, but also new ones in areas that we understand and quite frankly, we know will be built in the near future, so that things we know are working, things that we suspect will work in the future, so that the nodes not only work separately, but can work together. So de facto, we believe the compute of tomorrow won't be just compute. It will be productized compute. And that's what we're actually working on in rebuilding Foundry. So now there's still, that doesn't mean like the Foundry as an aggregate, we can do the whole thing tomorrow thing. Massively valuable. And we're working on very, very large deals where companies are like, look, we want to transform what we're doing or take what we're doing and export it to every company in our industry tomorrow. De facto, that's a Foundry use case. And I don't think there's anything else that does that, because you can take, for example, there's a very large company in the healthcare space. And it's like they have a very interesting way of doing healthcare. They can't sell it to other people without that essentially being a software offering. Building that would be 3 years, or it could be 2 weeks. So that we're very much committed to continuing doing, because there's like, we're an N of 1 there. But where we want to be is an N of 1 on not just making it small. We like that because then we see the IT departments now saying, okay, well, we have all these things and now we want to migrate here, and then selling them something that they can actually bite into. So it's because the primary resistance to Palantir has never been lack of Salesforce, it's been resistance on inside of the IT structure. And so now we're going to give them something they want, and then also build an ecosystem around it. So it's what I think people will want going forward. And so people can stop just buying pure compute. They can buy valuable compute. So that's actually a big project. I would say on that end and on these other ends, what's particularly interesting, I mean, it's obvious, but it's not just the dollars. It's like who's spending them, just like the charisma of what we're doing. We're a company that's like 15 years old and say like from revenue, 18 years old from concept. Is a company like ours should be getting declining talent. The talent we're getting now is the best in the world. It's the best we've ever gotten. And we're getting people who used to be at Palantir. Everyone knows how good our people who are coming back. Just like No company of our pedigree gets people coming back. And the reason they're coming back is because this is just fucking cool. It's like, you do this, you change the world. Now,
We have to pause that real quick. Carp just dropped the F-bomb. Any reaction to that real quick?
It was bound to happen.
You just said it is effing cool. I love it, guys. This is why I love it.
Yo, just letting you know, he's from Philly. The Philly just came out, bro.
The Philly it was at one point, he was like, this is fucking cool. Like, can you recognize that Mr. Morgan Stanley that's going to release a price target 2 hours later? This is really cool.
Well, good luck, Amit. There's no monetizing this video now. Thanks, Carp.
Honestly, is capturing the value of what we've done. Most of the products you would see on a map in an industry, any company, they're delivering things we built 7 years ago. We failed in capturing the value of that. We're not going to fail again. We failed in capturing the value of that because we were selling to IT and selling to people in an adversarial way. And we were 7 years, 8 years ahead, but they can't actually interact with you. That's not the right way to do it. And we're not going to do it that way in America. So we're building a specialized sales, which means it will take longer to get it to work because we're working. And in Europe, we have a differentiated on the idea that, so if you just look at the raw numbers, if you look at like, where we're investing in, it's like sales hires, very high-end salespeople in Europe, and then the rest is just like the best tech engineers in the world because we know we get them, we retain them, and it's just very differentiated.
Got it. That's super helpful.
Great, thanks, Keith. Our next question comes from Palantir shareholder Brian L.
Dr. Karp, thank you for taking my question, and thank you for furthering the ideals of Western democracy around the globe. Of the 1,000+ roles that you intend to hire this year, how many of those will be focused on sales?
So we're looking to hire 200 salespeople, basically, and everyone else is like just like in the past. So the way I think about it is like 70 X salespeople. It's like still 75% technical. We're going to try and hire 200 salespeople, and then as I mentioned, we just hired some very high-end sales acumen in Europe. Thank you for your question, and thank you for being an investor.
Great, thanks, Brian.
I'm not gonna lie, they definitely picked the easiest question from retail. That was like a layup they just gave to Carp. That was pretty simple.
Our next question comes from Mark Cash with Morningstar. Mark, you'll receive a prompt to unmute your line. Please ensure your video is on.
Oh, yes, thanks for taking the question. Kind of going off what you were just talking about, there's been commentary in the past around becoming the operating system for commercial industries. You talked about airline industry, maybe just talked about healthcare for a little bit there. But are there other examples, industry examples you could talk about how that's pulling in customers to standardize operations around Palantir? Thank you.
Thank you. There are a lot of the new deals we're working. So it's like, if you look at the timeline of Palantir, 2 years ago it was all kind of, 3 years ago it was like analytics and operations. And what you see now is kind of people building off of wanting a standardized, productized version of what we did at Airbus, what we've done internally at BP, what we did with Lilium, and so what I can tell you is, like, of the very big deals we're working on now, they're almost all this. It's like, we used to have to educate people. They didn't believe us. And what's interesting, I do think it's like, obviously, there was also just the COVID distribution thing. I mean, COVID distribution in England. England is not one healthcare system. It's 600 hospitals that are countries. It's like 600 countries. And this is true. And so just seeing this happen, or the networks of people hearing this happen, is the reason why you have 80% organic growth in the US ex SPAC, and with almost no salespeople. It's because people are now like, okay, now the caveat here is this is not for everybody. So there's like, not everybody wants, where this is particularly valuable is you have a business that is not protected by a moat, but has real insights on how to do something and wants to take over their industry. So it's like, you're sitting there, you have a product that is maybe the best in the world, maybe the second best in the world, but it's not protected. But you do have insights that are for software, you could take over your market. And that's where we're seeing is the thing that's really changed is, for once, it's not me fighting my way into the person's office and then throwing me out. It's them calling and saying, no, we know this can work. The pilot phases now are like days. And then we're on. And so and we're working on 2 or 3 of these now. It's very, very exciting. The one thing I would say as a caveat though is it's a little bit, we are both working on this and working on modularization with equal force, and they're just not the same thing. Somebody who wants this is not buying modular Palantir. They want the whole Foundry thing. And
that's a good point real quick. Like someone who's buying this is not buying a modular version of this, right? They're buying a more specific they're buying the whole entire thing, which is only going to increase the moat long term.
What they want help with is how would we identify people to hire to write to your platform? That's actually a big new question. Where can we find people? They don't have to be Palantir quality software engineers. Those are just too rare. But, and what we're doing with our platform is making it so that just smart people can actually write to it. And so that increases our TAM a lot, because smart and smart enough or specialized smart to write code at the level you write it here, those are just completely different TAMs.
Thank you.
Juan V.
Hey, Alex, thank you for taking my question. My question to you is, in a recent interview, Shyam said that what AWS was for developers last decade, Foundry really will be for developers this decade. Can you expand on what plans Palantir has to make Foundry available to a broader developer community? Again, thank you for taking my question, and thank you for allowing a retail investor like myself to have a seat at the table. It's much appreciated, doesn't go unnoticed.
See myself as a retail investor, and I have all my assets in Palantir, so I'm very happy to meet another retail investor. Hope, in any case,
that was epic.
I was not expecting Jay to be on there, dude. That's epic.
But what's also epic is he says, I'm a retail investor. I love that. I think he's trying to get a little more sentiment with us. That's amazing. This is a good question. Let's see what he says. Let's see what it is.
Done these Founder for Builders programs in America and in France. And it's not charity. It's because we want people in the tech community broadly to learn how to write to Palantir. We also want to learn from them. So that's one very important program, not revenue-based, but it's essentially very valuable for our tech development and very valuable to get technically literate people on Palantir so they can see what they can do and tell us what they can't do. Then there's the broader commercial. A lot of the companies we've supplied and government agencies who supplied to Palantir is they require an ability to write to Foundry or to one of our products as a core competence. And so one of the things we know, so we're obviously figuring out ways how we can train people, how we can make that experience easier, how can we widen the aperture. And by the way, obviously not just because, it's not just for the altruistic reasons that are obvious. It's if you want people who are valuable now to be valuable tomorrow, they must be able to interact with the software platform. So that's one of the reasons we've had a lot of adoption, because if you take, a company like Chrysler Fiat, which has very talented people, and it's they need to be able to write to the platform, and so and then work with the platform. So we're working on that partly for political reasons and partly because obviously it's very good for you as an investor in Palantir, and we're proud of that.
Great, thanks, Juan. Our next question is from Phil Winslow with Credit Suisse. Phil, you'll receive a prompt to unmute your line. And please ensure your video is on.
Hey, thanks for taking my question, and I do appreciate the cohort data that you disclosed today. That was very helpful. Just to dig in on that a little bit, Alex, you talked about starting to see inflection where Palantir is getting pulled into some of these commercial deals, sort of asking for Palantir without even knowing necessarily that's what they needed. You see that in the cohort number on the commercial side in terms of the new for 2021. I'm curious if we could just dig into that a little bit. Are you seeing specific industries really start to have that aha moment, get it? Are there certain use cases that they're leaning into? And then just have one follow-up to that.
What makes Palantir Foundry valuable is that it's not really industry dependent, and this is crucial for us because our sales force is so nascent. So we're very dependent on where either there's a crisis, or where again that crisis, or where somebody actually wants to enter a market they're not in and wants to expand. So I would say in the past we were very, very dependent on manufacturing. So like our high level engineering companies like BP and others, because we de facto needed the engineering talent because no one else believed us the product was differentiated. Now it is much more standard businesses of all kinds. And so just like really the who's who of American business, from like, people building tractors to building cars to oil and gas to distribution. And there's no one kind of company where we do not do well is like, we're not going to sell to a marketing company. It's like we don't bother talking to them. They don't call us. We're not good at marketing. Like they apparently are. They're so good at marketing, they don't have to quantify their results. We don't. So by the way, one of the places, Europe, one of the interesting ways to look at our business, by the way, since you're in Europe and since I have an affinity to your region, Liechtenstein, Schweiz, is, it's that Europe in general has grew slower. And that's, if you assume that comes back online, it's just going to be bombastic. One of the places, though, we're actually very strong in Europe is Switzerland. And there you have like a lot of the pharmaceuticals, insurance companies, banks that can't be mentioned using our products. And I think they use it honestly because it's like there's a Swiss quality to Palantir. It's like a very high quality product. We deliver it. It will work. You're not going to get the charming slap on the back or the steak dinner, and your software is going to fucking work. So,
and then just to follow up on that specific.
Second F-bomb of the call. It was dropped. All of us experiencing it now live. I'm happy to do this. Second F-bomb. Let's keep the counter going. Take a shot every time it happens.
Because obviously the net retention numbers that you have in U.S. government general is huge. U.S. commercial is huge. That's one thing I noticed just with the disclosure of the net retention is non-U.S. Commercial significantly lower. What drives that, and how do you sort of inflect that higher?
Well, first of all, I do think there's a handoff function, and I think these things are actually repeating what happened in the earlier days in America when is like where you have a handoff built in government because you have more time to actually get it right. Handoff to commercial, go to Europe. I do think in general, certain Swiss institutions, certain German institutions, certain French institutions, are not included, where it is slower. Like if you are building something very, very new, it will be adopted a little later. But then there's also just the COVID. The reaction to COVID in continental in Europe was different than in America. While it slowed things down in America, it didn't really stop them. And so what I suspect is going to happen is that Europe, because of COVID reopening and because of basically people copying what's happening in highly adaptive America and sometimes in Switzerland, you will see the European cohort grow. But again, to just make it a little more quantitative, we have I think 150% net dollar retention in U.S. commercial. Again, a number which we're getting with basically no one holding it up. So I don't know how this works at other companies, but I think if I were a scientist, I'd want to normalize that number. But even non-normalized, this is a very strong number. What we are going to show is net dollar retention in the U.S., and over time, we're going to show how this expands outside the U.S. And that I think what you'll begin to see is that this strength in the U.S. will go outside the U.S. and will make our business very, very robust.
Got it. All right. Thanks for the time today. Appreciate it.
Thanks, Phil. So Alex, we've received over 1,000 questions from shareholders. Obviously can't take them all. Are there any parting wisdom or parting thoughts that you want to offer about the business to our shareholders?
It's really tough times out there. really tough for a lot of businesses. It's a lot of things are going wrong in the world, in our world. The obvious danger, the lack of legitimacy of a lot of our institutions. And I can tell you why, while, at Palantir, we are very, very focused on our business, and bad times are very super motivational for us. And when we get to good times, we'll be even stronger. We're a little bit of a wacky group of guerrilla war fighters, but we're very much in fighting mode. And not just for us and the West, but also for our shareholders. And hope to talk to you soon. Thank you.
What do you
Okay.
think, guerrilla warfighter Carp?
First thoughts, first reactions. Kris, you're up first. What do you think? Just a raw reaction from the call.
I loved it. He was very raw. He put himself out there. He was a little bit long-winded with some of his responses, but that's good. That's, he didn't just we're the connective tissue of the modern enterprise, which I really got tired of hearing over the last 3 quarters. So I would say this was refreshing. I think sometimes you need a bit of realism. He actually acknowledged retail investors. He said he considers himself a retail investor. He's got pretty much all of his net worth is in Palantir at this point, which is also good because it's aligned with us. He also didn't say anything like, "Oh, buy our share, don't buy it, it doesn't matter." He actually said, no, we value our investors. So I like that. So I think we're in safe hands. I think he's the leader that we definitely need at Palantir to move it forward. I think times of adversity tend to help motivate companies to do more. And I think we're getting to the point right now where we're in some dark times, and with a leader like Alex Karp, we may actually see some light at the end of the tunnel. So I thought it was very positive. I liked it. The sentiment was good.
Real quick, shout out to endthedrugwartoday.com. So honored to be with all you. Thanks for all your work. Love all your videos on Palantir. We have some more videos to make after this call. Sachin, what are your thoughts?
So I think first thing is that when he started in the DPO and DPO process, and after that, he was very closed in terms of sharing things with the investors during the call. He was coming in the videos which were pre-recorded. So he came live, he discussed things which by nature he was uncomfortable, but he went into his group very soon, and he was enjoying it at the end of the day, he was not sticking away from tough questions. And he said, we need to work on sales. We need to honor investors and more. We need to listen them more. So overall, I think it's pretty positive, because that has been the biggest complaint. I think what people complained from Palantir last year, they said, oh, SPC. He made it very clear that we are going to issue less SPC this year. The second thing was that he's not coming on call answering question. He came to call and answer the question. The next was that people were saying that why you are not investing money on more salespeople. He said, yes, we thought sales was not the way we are going to do 2 years back, but we were wrong, and now we are trying to settle it. And he said that what their customers are doing is that their customers, once they learn about Foundry, they buy it as a whole, which gives them a lot of opportunity. I think this was the biggest statement he made, that when a customer buys Palantir as a whole in terms of Foundry, they can enable very average people to build great products. So if more people are building their products on Foundry because they can, it increases their TAM massively. So I think this is exactly what we discussed. Until and unless you make your platform self-serving, accessible to more people, easy to more people in terms of developer community, manuals, tutorials, access, I think only then it grows. So he said pretty much that that's what he is looking in terms of direction of the company. Back to you guys.
I loved it. Shout out to Juan Lee for the $5 gift sticker thing on YouTube, and Seattle JCB. Seattle, see your comments all the time. Love you. $5 for the little sticker thing. Yeah, let me give my raw reactions. First of all, I think the setup was nice. I like just the accent of the purple light in the background. I was not expecting this to be the setup. They took 2 or 3 retail questions. Retail questions were pretty good. One was about Foundry. I think that was the most sophisticated one. The other one was SBC. It wasn't the most sophisticated question, but it's something that I think we finally have something on footage of Karp talking in depth about what the answer is to that question. And and I want to talk more in depth about that in a second. And then the third thing was just like, how many salespeople are you hiring? So those were some good questions. The questions they took from the institutional investors, I think, were also good. Sachin, you made a good point in the chat during the call that someone asked, why are they giving them so much time? And you said that they have to release a price target. I never even thought of that. And this is why I like having you in these calls, right? That makes a lot of sense. You're going to give this Morgan Stanley guy 6 minutes versus the retail guy 2 minutes because this guy needs to feel good about the company because he's going to release a price target. So interesting little dynamics like that I didn't even recognize as well. By the way, we just passed 1,000 people on the live call. Awesome stuff. So my overall sentiment was, he believes that times are bad right now, and Palantir is positioned in a phenomenally differentiated way than other companies. And there's 2 reasons for that. Number one is the business. $2.3 billion on their balance sheet, 0 debt, and the ability to expand. Number 2 is the product. I mean, I don't know if he's BSing or he's serious. Some people may think it's BS. I know some people still don't like how Karp communicates this. I don't think it's BS. I really don't. He says we have the best effing product. And that F word to me wasn't for show. It was a genuine reaction to like, guys, this company is going to be phenomenally big. You don't understand it yet because of macro dynamics, but we have the best product in the world. And the reason I can feel he's honest about this is because he admits where it's not working. So when he says, hey, we don't work well with marketing companies, I'm like, I believe that. Because a marketing company, they're working with their clients, right? They don't really understand full data optimization at the level of like a pharmaceutical company. They wouldn't see the full use case of Palantir. So for him to stand up in front of millions of people and be like, yeah, marketing companies don't like us, but we know we have a Swiss knife. That to me shows that he has a level of sentiment about the product that is just different than what a lot of other people would say when talking about the product. And final raw thought, and then I'll give it back to you, Kris, in terms of what you're thinking. And I want to talk about the stock-based compensation part. Is that he thinks when bad times are bad, Palantir thrives. And this to me is implicitly referring to what's happening in Russia and Ukraine. I mean, to me, like, it's the obvious elephant in the room. He's like, look, when bad times are bad, we're good. So when things that are bad are happening, Palantir thrives in chaos. And this is not new. He said this in the Kevin Warsh interview, which means when good times are good, that is only going to accelerate the business because more businesses are going to have more money to spend. More businesses are going to want to become more efficient and optimized. Money is going to be cheaper. So in a world in which growth stocks are being, destroyed, Palantir is still growing, and Palantir is able to have the best product that is growing in this time, which means it's likely only going to get better when things get good. Kris, handing it off to you, but specifically, I want to talk about stock-based compensation and how they said we care about retail investors. Any thoughts on that?
Yeah, before the stock-based comp, just one thing, and I'm glad that he finally clarified, the sales force is still early in its development cycle, right?
Yes.
So he gave a good number of people that are currently in the process of Salesforce, but also getting people added to the Salesforce. I think that is huge because that means that the value of those salespeople has not been fully realized, which I think now that, and this is something that I've been saying over the last 6 months, with COVID starting to kind of come down, these sales folk can actually physically go on site and start selling product, right? One of the things that's always been a hamper, I think, in the last year is trying to sell product during COVID. I think that they had an idea that they were going to ramp up a lot, but then Omicron kind of just threw a monkey wrench in that the last couple of quarters. But I think we're starting to get to a point where now they're actually going to be physically able to go everywhere. If you look at all the European countries, they're ending all their mandates, all their lockdowns, all their stuff. So now they've got people, they're going to start utilizing them. And I think we're going to start to see a good number of revenue growth from sales. SBC, he gave a really good answer. He was just like, look, this is how it is. This is what we do. And there's not really much. I think I was satisfied by his answer on that one. What do you guys think?
No, I agree. I think his answer on SPC was very clear and very short. He made it very clear that we are not going to issue a lot of SPC. Our SPC is going to be in line with what our peers and what industry standards are. So that should not be a concern, because as long as we are delivering growth, I mean, it is justified. So at the end of the day, it comes back to the same point that if their revenue is going up, and they are getting more customer, I think it should not be a concern. SPC is an investment. And if it is invested back in a company, I mean, we need to see a result of that. So if results are coming, I think SBC is justified.
Yeah, I think the SBC point was really good. I mean, it was a good point for him to sort of sympathize. Like, look, it's like, because I think the narrative was, oh, you guys are just using SBC to take advantage of retail money or just investor money in general and like reward your employees. And he's like, no, the business does not make sense unless we're GAAP profitable. We have free cash flow. If we have massive amounts of SBC, that's not how it's going to work. I think he said $9 million or something of worth of SBC, which is nothing to this type of company, right? So at that point, I'm very happy he cleared that up as well. Now, I want to talk a little bit about his argument about Europe and the idea that they were growing in Europe, or the idea that COVID kind of stopped a little bit of their growth. And he says specifically it can go bonkers when things open up in Europe. Any thoughts on that, or why the sentiment was around Europe growth?
So I have a point of view, because I mean, I have spent time in Europe in terms of B2B sales a lot, and B2B sales in Europe is very different from how do you do in USA. For example, like in the US sale, you will have a product, you will have a marketing and sales working in a conventional, but in Europe, you need somebody to open door for you. You need people, you need to be part of the culture. I mean, it's not like somebody from US going to a European company and he is welcomed and listen. Somebody has to normalize that relationship there. So relationship goes a long way, and especially when somebody is trying to buy a lot of a large product. But the good thing in the European business, which I like a lot, is that there is no corporate dance. It's very direct. They want to see the product. They will ask their question direct. Once the doors are open, they like it, they give answer fast. But to do that, you need people in Europe on ground, and that's what they are investing. So, and I mean, if you see Europe as a whole, even Western Europe, I mean, it's almost as big an economy as US is. Okay, and US, see, one thing is also in Europe, because this is what I understood from some of the regulators I was recently communicating in Europe, is, see, Europe has a very strong feeling at this particular point that they are falling behind in military and defense. They are over dependent over USA. Their unicorn ecosystem is not as good as Silicon Valley, and now 20 years down the line, they are seeing that at the end of the day, the productivity in Europe overall is low, and you cannot increase it until and unless there are more companies coming up there. Another thing is, they're also finding that the economics is changing, because there is US on the other side, they depend, and the China is flexing muscles. So the whole idea of Europe was to become a self-sustained and contained in a way that they don't have to fall to any hegemony overall. So Europe is going to be a very big center in terms of investment, and I'm pleased that they are making more focus there.
I thought once again that he did stress, and it was good that he did, that COVID was hampering a lot of their growth. So I would say this to anyone listening: if they're growing like this with COVID, what are they going to grow like without COVID, where they actually can send salespeople into the companies?
That's a big point.
The other thing is, a lot of companies have also not been investing too much capital into digital transformation during COVID, because it's almost like, okay, we're going to hire a digital transformation engineer to do what? Like, they're going to be working from home. They don't see the value in it. So as the economies start to reopen, because that's what's happening, and a lot of companies are reopening, I think Palantir has a way to make some really big inroads into that reopening space and capitalize in the next couple of years. So hopefully the next couple of years we see this sustained growth and maybe some acceleration in growth. The other thing that he mentioned was Europe is starting at a very low point in terms of growth, right? So he said even if the US segment grows not as much and Europe kind of kickstarts itself and grows really fast, that means that overall revenue will kind of match up and make up the difference. And US is on gangbusters growth too right now. So I think right now Europe and America combined, I think we should start seeing a lot of growth. I was a little bit and one of the things I also heard was the lumpiness of how some of these contracts work, and that we're probably going to see a lot more growth in the future in the next coming couple of quarters, because I think what happens is, depending on which cohort you belong to, you kind of get a little bit a lumpy on that. So one of the things that I saw in the slide deck was the Gotham cohort for 2021 was just like a tiny sliver at the top, not really much more than that. So most of the revenue that they got from Gotham was from cohorts in 2020 and 2019 and 2018 and before. So that just means that there's bigger opportunities for them to expand that sliver in 2022. So let's see what happens.
Agreed. Did anyone catch that moment when he said commercial revenue to double? He kind of just threw it out there that commercial revenue could double, or theoretically should double. So again, it seemed very obvious that the IR probably didn't want to say it, but it seems obvious that they're sandbagging a lot of stuff, right? Given the Q1 projections that they estimated and given what ultimately they're going to be able to do. One thing I want to talk about. So first of all, we just got Palantir down 10%, $12.57 during pre-market. Just got my notification. Palantir says we get the best talent in the world because what we're doing is freaking cool. Sachin, first thoughts to his comments on talent and the fact that returning engineers are coming back to Palantir. What does that mean for the conversation we were having about big tech in the beginning?
So two reflections. First, I'm a bit biased about Palantir talent because a lot of my friends now work in Palantir. I know the quality of these people. So let me give you an impression of somebody else who shared the impression of Palantir engineer with them. So this is one guy, who is running a private equity funds, 100 million asset under management, very close friend. And he said that when he was investing in Palantir and during pre-IPO, he actually went to see the company. Some of the investors went there, and there was this young guy, 24 years of age, and he actually managed to answer all the investors up there. And he said that I have never seen a company that produces talent like that and that make them so independently working. And this is one of the reasons he decided to invest in Palantir. Okay. So one of the things is that I think it's not about the talent only. They are giving a lot of responsibility and a lot of freedom for the young minds to figure out solutions. And it's not like this, okay, that you need to figure out a solution. They will say, okay, if the solution, you need to be on ground and you need to go to front, you go there. So it's a very involved kind of workforce, and this is what you cherish when you are in the early part. If you come from a top university, you will get money and you will get a good job anyway. What challenges people a lot of time is that they want an environment, they want a team where they feel belong, and this is what Palantir is turning into. So I think that's extremely bullish. I also know the quality of people now they are hiring. A couple of people I saw in the energy domain they have hired recently. I interacted with them. I think super talented. I met one lady in UK. I think she came from the military background and she joined, and she looks after now the Foundry for builders in the UK. These people are coming from very diverse background, and they have done things. They understand the industry context. That's the best part. The second part is, I think this is one people were saying and discussing, Google goes 20 million. Apple goes 20 million. Because if Google goes 20 million, that means the data sector will go exponential from here. And if Google goes 20 million, that means a lot of companies will go 10 million and a lot of companies will go 5 trillion. So the question for you is, where do you want to go? 2 trillion to 20 trillion, or you want to go from something which is 20 billion to 5 trillion? I think this is a decision everyone has to make for themselves. See, no company goes and just capture all the market. If the company is growing at such a rate, that means you need to take a step back and you see what are the fundamental sectors they are growing and what are the sectors eventually are doing. So big data, if you see as of today, we expect that AI alone is going to create value more than 75 trillion in the next 10 to 15 years. Of course, Cathy Wood is even more bullish about it. So at the end of the day, I was reading the another report by internally that we have finished recently, was that by 2025 we are expecting the automation to increase in a lot of industry as much as 50%. The current rate of automation in these industries as of today is actually less than 5%. So when you go into the automation, it's just not about just doing things in an automated way. You collect a lot of data, and this data is useless until and unless you make sense out of it. And even if you make sense out of it, what will you do with that? Until and unless you turn into a product that can create value for you or your client. So this is like this. If you see this in a cycle sense, you need something that you can churn this cycle fast. And this is exactly what Alex was saying, that we can enable people to work faster, and even simpler people delivering solutions on that. So yeah, I mean, I'm pretty pleased actually. He came on call, and actually it was one of the best earning calls I have seen from any CEO ever. I mean, I remember some of the calls Ilan has done; they were pretty dope, and yeah, this one is right up there.
Palantir ended 2021 with $3.8 billion in total remaining deal value, not including roughly $2.8 billion in indefinite delivery related to governmental businesses. That's more than $6 billion in remaining total deal value for the years to come. And they bought $1.5 billion of revenue in 2021 for comparison. So theoretically, over the next couple of years, if they're able to slice, let's say 30% of that $3.8 billion every single year, which is just deal value they are expected to get, that's not even including the new growth they're going to have year over year. We could have a year coming up with some multi-billion-dollar revenue growth, likely within the next 3-4 years. Given the amount of deal value that's actually remaining right now.
So the way I would see, and I mean, I got some guidance on this part, is like how to see the remaining deal value in terms of monetization. I think it is fair to expect that 50% of remaining deal value is within 2 years at least. That means you are going to.
Why is that the case? Why is remaining deal value within 2 years and not 5 years?
The reason is, if you see a lot of the contracts they have, they are like 3 to 5 years kind of contract. The majority of 60 to 70% contract lies within the 3 years. This is how most of the corporate works. And if you see in terms of revenue, that how the money is spent, it is loaded pretty much in the first 2 years. Okay. So based on assessment, my idea, and I could be wrong by some margin, that when we talk about this deal value, I mean, outside like 1.8, 1.9 is pretty much what we are talking in this year and next year. Okay, which means that if you put a lot of sales force on top of what you have already, I mean, you should deliver some alpha or some big daddy quarter at some point of time. I mean, this is how I think, and let's see how it works out.
Kris?
I'm glad he didn't answer any of those stupid questions on the say.com thing. The first few that were on there that were just stupid. You know what? Fuck you, Ankit, and your stupid ass question.
Yeah,
and all the fucking people that upvoted, all of those.
Thank you for definitely making sure this video doesn't get monetized. So these super chats are definitely going to help today, because you and Carp have just been screwing me over today. No, yeah, I mean, I think that makes a lot of sense. The remaining deal value is also really interesting, because this means they have lots of contracts that they just have to execute on. And as what Sachin said, if the majority of those happen within 2-3 years, like 2022, 2023 to 2024, we should be seeing some of the value of that go into earnings. And I think that's another hidden knife that they have, right? It's like, all right, all this deal value along with it. Like, once we start getting back into a bull market, and I don't even know if we're necessarily in a bear market right now, but like, it's definitely not the best. Once we get into a bull market and those companies, as Kris said, start spending more in digital transformation, the SPACs start going up, because everything's going to start going up in a bull market. And then hopefully, if the SPACs have been producing results, they will be valued in a meaningful way. And this total remaining deal value starts coming to Palantir, and they just start growing. This is where I think we get that inflection point. So we didn't get the inflection point this quarter, which is understandable, but maybe by end of 2022, we start getting ready to go.
There is a very strong school of thought that building business apps should be as easy as building an Excel sheet or a PowerPoint, because that's pretty much everyone wants to go. Now, in order to do that, you need platforms that can actually handle that. Now, sometimes we talk about low code, no code platform like Bubble or Webflow. They're pretty good in doing small product into a certain extent. But when we are talking in terms of enterprise, and you see like Google has invested a lot of money in that, Amazon has invested, Microsoft has invested. But think about it, that if you buy something that is super expensive and you start realizing that you can use it in more ways than you previously imagined, I mean, at the end of the day, it gets super hot within the company. So the question here is, can Palantir enable people to build business apps in the enterprise setting, which can create reasonable value, as easy like an Excel sheet or a PowerPoint or like an Excel macro? Once they achieve it, I think that should be quite cool. Back to you guys.
Yeah, I mean, the path to profitability does not seem as far as it did before. Operating margin has improved dramatically, with a Q4 at a 3,500 basis points improvement year over year. And for guidance, Palantir. So can we talk about this guidance thing real quick? Because Sebastian had an interesting tweet that he was saying. He said, not going to lie, a bit disappointed with Palantir earnings and guidance. You can't significantly ramp up your sales force, which puts pressure on margins, and guide for less than 30% revenue growth in Q1. So they're still saying revenue growth 30% year over year. They obviously beat that this year by 41%. But he's saying for Q1, they're guiding a little bit less than 30% revenue growth. Thoughts on this?
So you remember one of the slide you were discussing where they increased the sales from 6 to 29, but if you see the tenured people increase only from 4 to 6. So it's not only just increasing sales force, because there is a lag by the time you expand the sales force and by the time they start realizing the value. This is the slide, the last one. There's this one. So if you see here, the end of year 4 and 4 here, and in the end of year 2021, you see the number of 29 and 6. So what it is telling, they hired people from 4 to 29, but people are very new in the company. Only 2 people increase when it comes for tenure more than 9 months. So that is what is happening. So in this particular, so they are hiring a lot of people, but by the time they start realizing sales for them, it is going to be a delay of 9 to 8 months before it happens. So that could be one of the reasons. And like I said, I mean, you saw even this quarter, they said 418 and now they are 433. So what they say in terms of guidance, it's I mean, I wouldn't call it BS, but yeah, I mean, it's just a flag they raise. I mean, my understanding is the way they are going, they should be reaching 500 million if should be sometime in Q2 2022. That's my view.
Yeah, those are my thoughts as well. I mean, I think what you're saying about sales, and it takes time for that impact on sales to happen on the business, that makes sense. And also, it's just sandbagging at the end of the day a lot of times in terms of wanting to make sure the numbers don't necessarily they beat expectations on those numbers. Slowdown in governmental business, some concerns around this. Again, any questions, guys? I think we're on for like another 10 minutes and then we'll wrap this up. But any other questions any people have? Slowdown in governmental business, Kris, any thoughts on, was that good? Was that bad? Anything you care about?
I think it's just the lumpiness of the current environment. I think we should start to see a boost up in revenue for government sometime in January, February, when they're actually, January and then Q2, when they're actually able to recognize some of that revenue. A lot of these, like I said, a lot of these contracts, according to their budgeting and everything else, get worked out in Q4. Fiscal year for the government tends to end in October. So it just goes right to the next year, right? So I think a lot of those contracts are probably, if they get re-upped and significantly re-upped, which we've all seen constant number of contracts being renewed all over Twitter, thanks to one of our friends. I think those numbers will hopefully add to the bottom line in the next couple of quarters. So we'll see.
Yeah, agreed. Any other questions? We will be in a bear market. Gary Eric Invest Ramberg says we will be in a bear market within 3 to 6 months, but the exciting part is Palantir thrives in bad times. Yeah, guys. I mean, look, if you're in a growth stock, right? I don't know how Roblox is going to do in the next 3 to 6 months. Things are pretty bad. But with Palantir, I understand that their market opportunity given bad times is Karp explicitly says bad times are good for us. So it's just at the end of the day, and it's not because he wants a war to happen. It's because if these things do happen, their technology is probably, we can theoretically say, the only technology that is going to be able to provide intelligence at the highest of levels, given they have level 5 security clearance with the DoD. So it's pretty big. Real quick, Vladimir says Amit is so deep into the Palantir rabbit hole, even if the stock hits 800, he wouldn't be able to. Well, if the stock hits 800, I do have some things I would like to do with my life. So but yeah, I see the potential going really big, and this is an exciting moment. We may be looking back on this 5 years from now, thinking, oh my God, they grew 41% year over year. It dropped 10-15% in pre-market, and now it's at a $300-400 stock. It'll be nice to look at that. Sachin?
So just to reflect quickly first on my views on the government business. One thing is, the government business has gone down, okay, but the government business is also works in a bit of there's a bit of sinuosity in the cycle also. So what we need to see is that in the last 2 quarters, overall, did government spend less money on SaaS and software? If the government is spending less money, that could be one of the reasons. Okay, if government is increasing their budget and Palantir budget has gone down, I think that is something we would like to understand why it is happening. So, like Kris said, it's better that we observe how it happens in the Q1 and Q2. One thing is extremely clear that government has to spend more money on AI and SaaS. If that is given for up to an extent, so and given the Palantir position in the circles, their revenue should increase. So if it stays like that and it starts getting flat, that is, I would say it would be concern then. Okay. At this point, I mean it's a flag, but it's not a concern. Okay. Another thing which is very important is that, I mean, we have to very clear also that right now the government, when a government grant large contracts, there is a lot of influence by senators and everyone, whichever way you look on this. And we know that the government is not very friendly in terms of that. So that would definitely dampen at one point or other. Like for example, another contract I saw like was C3I, and the news came like 500 million in government. And then I read the contract. But it was a call out contract. That means this is amount when government, when they need you, they call you. Okay, you are just, I mean, C3 will be very lucky if they can make 50 million out of it. I mean, I'll be honest.
They're a
I mean,
booty
you need to
call.
understand. I mean, I was in a company which was a competitor to them, so everything they do, I look very closely on that. So if you say like the 500 million and has been projected, I mean, you guys are gonna see like how much revenue they are going to make in next 2-3 years, and we can always come back to this. My view is that we have to be very clear that the defense part, like the defense budget spending, I think this is where Palantir has more control in the government sector, because defense do not want to mess with whatever politicians on the both sides of the aisle are doing. They say you can do whatever politics you want to do, but we are in war and we are on front. Our people are there. We want the best solution out there. So the increase in defense budget, increase in AI and SaaS spending by defense, and even after that, if Palantir is not increasing, then I would start worrying about it. Back to you guys.
Yeah, I think this also answers one of the questions in the chat saying, this is from Howard Pratt, for Palantir to really take and go parabolic, do you think Trump has to be in office? I think the answer to that is obviously no, primarily because it's about the defense spending budget, right? So I think Biden is asking for about $787 billion of defense spending. We'll see if that gets approved. And if that's the case, that money has to go somewhere. It doesn't matter if it's Trump. Like the one thing the country can agree on is to be safe. And that means companies that are in the defense space are going to get a portion of the capital that is allocated to being safe, because obviously you can't have a country if you're not safe. So it's really irregardless of administration. I mean, Palantir was contracted through 4 different administrations. So it's not a question of Trump. It's really just a question of how this ultimately plays out.
I will say one thing about that, though. Thiel is backing quite a few Senate candidates and some of the House reps. And from what I can see right now, the Democrats are probably going to get clobbered in the midterms this year. If there is a political shift towards a more Republican-centric, Senate and House, that could play well for Palantir, especially if there are some high-profile Republicans that are Thiel backed in the government, because there has to be a level of understanding that legislation can come down, and there were actually some advocates with in the past that had affiliations with Peter Thiel and Palantir that were able to secure some contracts for Palantir. So if Peter Thiel luckily gets those two people together and gets them elected, that could actually work in favor for Palantir. So the two that I know are JD Vance and Blake Masters. Blake Masters is actually the person that co-wrote 0 to 1 with Peter Thiel. So he's running for, I think, Senate in Arizona. So if he ends up getting elected, like I said, could work out very well for Palantir, because it just gives you more voice on the Hill to actually get stuff done, right? Not necessarily just for Palantir, but basically an entire sector which Palantir is occupying. So you need advocates on the Hill that are going to be able to push some agendas that may be beneficial to your company overall. So I think Thiel also, the fact that he's no longer on the board of Facebook and now he's more in the political realm of doing some campaigning work, actually does play into Palantir beneficially if he is successful. So I think from a Palantir investor standpoint, I hope the candidate that Thiel's putting up get elected, and who knows?
No, I agree. My view is like it doesn't matter which side of aisle gets more candidate, but they should need to bring candidate who thinks more in terms of nation and who gets things done. Who are not like these people who get in cancel culture and cancel this and cancel that and run after this and run after that. We don't want politicians like that. Be it Dems or be it reps, we need people who get things done and who can actually work together when needed. Okay, I hope the current circus stops up to an extent.
2 more questions. Crazy John says, I watched Jeremy's rewatch of your 1-hour interview video, and there you talk a lot about your expectations for commercial business for Q4. It was high. Were those expectations satisfied? Yes. Commercial business was phenomenal to me. 132% revenue growth on the back of 371% increase in customer count. These are not numbers that companies are able to put up. These are rarefied numbers for this to be able to do. Net dollar retention of 150%, which is just absolutely insane to me. I think 2022, this commercial business is going to fly. And I think we're already seeing it right now, and we'll see how that works out. Cameron Vincent says, do you think they will also bring Gotham to Europe and get government contracts too, or just Foundry? They're already working in Europe. They just expanded into Germany. I think one of the hidden growth sectors, and Sachin has talked about this before, is the government. Now, it's not going to be prioritized over commercial, but yes, I think they're going to be going heavy into digitalizing every European government, particularly because those are the governments that care about data privacy the most. So the sell is not the hardest in the world as well.
Gotham is present in several European countries. I can confirm that. There are people who are supporting Gotham in many countries for a long time now. So yeah, I think it's already there. They have seen it and they use it in a lot of different ways.
Midwest, I love you. He says 1250 seems to be the support in the pre-market. You are wrong. We're at 1240. So you are incorrect about that. We'll see how it turns out. We're gonna end up on the call soon. One question I want to ask, because a lot of people have been asking this question and I've been seeing it. Some people have been saying in the short term you should sell puts when your stock is not in the best position as what's going on with Palantir. Can one of you explain what does it mean to sell a put in clear English, and how does that benefit you when the price action is doing what it's doing like today?
So let me explain.
Oh, go ahead.
So go ahead, Chris. You
No,
go
I was
first.
going to say, times like this, when there's a lot of implied volatility, what happens is premium pricing goes up for options contracts. So basically the price of an options contract rises, right? So if you get in at a good price and you're basically saying, I will buy the stock from you for a fixed strike price, right? You have to pay me premium up front. What ends up happening is you almost get a discount to what, depending on what it's currently trading at, if you buy it right. So an example is I received about 90 cents to buy Palantir at $13 that expires at the end of Friday. So basically whoever I sold those puts to has the right to sell those shares to me at $13. But in order for them to sell them to me for $13, they had to pay me 90 cents up front. So my average would be $12.10 right now. So right now, even though there was a negative response and we went down, right, I'm still in profit because Palantir hasn't dipped below that 12.10 number that I essentially have.
So if it goes below 12.10, that's when you would be in a loss when you have to buy those shares.
But even then, it would be that I'm getting a discount. If it stays above 13, I don't have the option expires worthless. So here's what I could have done. I could have bought at $14.30, yesterday or the day before, right? But instead I said, nah, you know what? I see the implied volatility. Let me sell some puts on it. $13 strike. I felt like the implied volatility gave me enough of a cushion to the point where if there was a downturn, I was able to pick up some shares on a discount, or if it went up, I would collect that premium, and now I got a nice almost 8-9% return for my money that was just sitting in my account anyway.
So I agree with Chris. I think a few things everyone has to understand, that if you are selling naked puts or naked calls at any particular time, selling option is a very risky strategy, and you need to understand what risk you are taking. So for example, I think Palantir is a good buy at $14. Okay, somebody might think $13 is good. but the stock is at $14. The question for you is, you are ready to buy at 13, but stock may go to 13, may not go to 13. So if it doesn't go to 13, you neither buy it, you don't make any money out of it. So at 14, if I sell and at the price put, I'm taking an obligation to buy Palantir at 14, and the premium, let's say, is $1.50. This is what I'm expecting it to open. So to me, the break even is $12.50. That means even if the stock, and if the stock never goes to and stays above 14, I miss my chance to buy, but I still collect a $1.50 premium on that. So basically, you collect money during the time stock is not in your favorable range to be bought. So for example, if somebody says that Tesla is $800 and I'm okay to buy at 750, but maybe it doesn't go to 750 say 8 months, and may go to never. So what you do, you keep scalping this money every 2 weeks, but you need to understand you are doing it because you are committed to buy at 750. I mean, it cannot happen like this. It goes to 750 and you don't have cash and margin calls and all that. I mean, guys, that's what I said. Option strategies should be worked out very specifically about it. There are certain risks. You take several decisions. Like for example, I mean, an option premium goes high when the volatility goes high, and that's exactly what Kris said. So you should sell, for example, at a time when volatility is high, but you need to understand what risk you are exposing yourself.
And
This is
again,
what
the,
happens.
the premium for the options are high because there's a higher chance that your contracts actually execute because it's volatile. So that's why you get paid.
So high volatility mean that the move can be large. It could be on the higher side, it could be on the lower side. That it doesn't say which side. It's just how the 30 days implied volatility works in up there, because that's what you want. I mean, if you are paying a premium, you want to be sure that your premium is proportional to the probability of the move. If the probability of the move is high and its amplitude is high, the premium goes up. Okay, so my strategy is always is like when I am dealing with the stocks with high volatility, I mean, I try to stay in option selling mode. And when the volatility collapse and the stocks are down and sometimes bottom up and goes flat, that is where I try to buy leaps. I mean, I'm not saying guys you follow it, because when I do this, I do a lot of modeling also behind it, and yeah, I understand the risk and I can weather the risk as well. So you should only do it if you understand these things, and please spend time. I mean, you should not YOLO, and you should not speculate and just buy because somebody on the Wall Street bets is saying something.
Kris, any thoughts? You're good?
No, I think I'm good. That's it.
All right.
I think Sachin nailed it.
All right. I think that's the conclusion. We had, I think, 1,060, 1,080 people at the peak of this. Thank you so much. We know Tom was streaming. Jackson was streaming. Shout out to them. For 1,000 of you, 7 of you guys still here to show up to our stream and listen to these 3 guys who are bag holders talk, hopefully very intellectually, about this company. It means the world. Kris's and Sachin's YouTube is in the description. If you have not subscribed, I would highly recommend it if you're interested in Palantir content or general investing content. Give their channels a chance and see some of the stuff they already have on there, and their Twitters. We're all tweeting every single day about what's going on in the market, what's going on with growth stocks, what's going on with Palantir. A lot of the breaking news that happens with Palantir, or just like really strategic analysis, is happening on our timeline. So highly suggest following all 3 of us on Twitter and subscribing on YouTube. Again, guys, 1,000 people showed up to see 3 people talk about Palantir. We'll see what happens in the market. If it drops lower, I'll be buying, and you guys can decide your own strategies. But thank you for showing up. Any last words, Kris and Sachin? And shout out to Tom in the chat. Just saw you there.
So I think just one last.
Let's do Sachin.
No,
and Kris.
go ahead, Sachin. Go ahead, Sachin.
I think just one comment for everyone is that, guys, just be very clear why you are invested in Palantir. Okay, I mean, do not change your story day by day because stock price is going up and down. You need to have a story. You need to have your own thesis, why you are in and how long you are in. The moment it is volatility, sell it. The moment it holds and keep holding it, I don't see any reason to sell it. But that story has to be unique to everyone. I know my story. That's why I'm very comfortable holding it. Kris, back to you.
Yeah, I would just say to anyone who feels like a bag holder right now, you're only a bag holder if you sell. If you have any conviction on this company because it's still growing. Now, guess what? If this company doesn't become the $1 trillion company and it only becomes a $500 billion company or a $200 billion company, that's still 10 times what it is right now. You're not investing in a product that's not growing. You're investing in a company that's growing. So if your thesis was, hey, I'm going to become a millionaire and I'm going to retire by 2030, and that went down a little bit, I'm sorry, maybe that's something that you should reconsider. But at the same time, I'll tell you this right now. If you have been committed to Palantir for over a year, you've been researching it, you understand it, are there any alternatives that can give you that same level of confidence? So before you sell, just think of that first.
Yeah. Awesome stuff. Thank you guys for joining. We will do some more live streams in the future, and we'll have some recap videos on all of our channels discussing everything that went down in earnings. Overall, pretty nice earnings. Not phenomenal, but not bad at all. Good track record for the company going forward, and we will see how things turn out. Thank you guys so much for joining. We'll see you on the next one.
See you guys.
Bye-bye, guys.
Bye.